People are. 6 million people just this week alone basically saying, holy mackerel, I don't know how I'm going to make my own expenses for the next few weeks, days, months. So it's happening today to individual Americans. And what we've done is disproportionately prop up and protect poor performing CEOs, companies, and boards. And you have to wash these people out.
Well, we're going to continue the debate another day. Chamath, you've always given us something provocative to chew on. You did once again. We'll do it again soon, I hope. Thank you for coming on today.
Thanks, guys. Talk to you soon.
All right. Bye. That's Chamath Palihapitiya. We're going to take a quick break. Up next, it's a story that's getting a lot of buzz on Wall Street right now. Audio recordings of a top executive at Bank of America revealing the pressure on employees to perform during the coronavirus crisis. We have those audio recordings. You have to hear it.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know that there are so many more places to hear TuneIn than on your Alexa? With compatibility on your phone, tablet, computer, car stereo, smartwatch, smart TV, game console, and more, there's a way to hear your favorite audio on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Given all the extra time spent at home these days, are you using TuneIn in all the ways you could be? With hundreds of compatible devices, including smart speakers like Sonos, Bose, and Roku, and smart assistants like Alexa and Google Home, there's always a way to listen to the audio you love. Go to TuneIn.com to discover all the ways to listen.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, but I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Welcome back. Let's get the headlines now with Sue Herrera. Hi, Sue.
Hello, Scott. Hello, everyone. Here's what's happening at this hour. The Senate adjourning until Monday after failing to unanimously pass a $250 billion relief package to aid small business. Democrats want a much larger program, which would expand aid to include hospitals, food assistance programs, and local governments. 799 people died yesterday in New York State from the coronavirus. That is the highest daily surge since the crisis began. Governor Andrew Cuomo comparing the loss of life to the 9/11 terrorist attacks.
9/11 was supposed to be the darkest day in New York for a generation. We've done everything we can since 9/11 to make sure 9/11 didn't happen again. We lose 2,753 lives on 9/11. We've lost over 7,000 lives to this crisis.
Morgan Stanley says its CEO, James Gorman, has recovered from COVID-19 after falling ill 3 weeks ago. The company, though, did not disclose his diagnosis to shareholders, saying it was not, quote, material, since he continued to lead the company. As always, for more coronavirus coverage, you can go to CNBC.com. Scott, back to you.
Okay, so we appreciate it. Thank you. Now to a CNBC exclusive, a recording obtained by us of a call between several executives in Bank of America's equities division and the firm's critical traders. It reveals a tension between trying to perform during the coronavirus crisis and the precaution that needs to be taken to protect the firm's workers from getting sick. In one piece of the recording from the March 25th conference call, Fabrizio Gallo, B of A's global head of equities, known in the firm as Fab, laid out the stakes for those considering staying at home, especially if the crisis lasts for an extended period of time.
At some point in time, one has to make a decision. And the reason why it's called critical function is that we have a critical requirement by FINRA to provide proper and orderly market. And we cannot provide properly and orderly markets to clients if 99% of the population decides they don't feel comfortable.
In another piece of the call, Mr. Gallo told the group that staying at home to avoid getting ill wasn't ideal.
So people have to understand that too. You cannot on the one hand say you don't trust the firm and on the other hand get the money from the firm for a long period of time if you're in a critical function. Now if people decide that they don't want to be in the critical function, we can have that conversation too. Every single person who is in this office right now has a family. Every single person in this office right now has children. Every single person in this office right now has elderly parents. Some are very far away, some are here. Every single person in this office is worried about it.
Though Gallo said there would be, quote, special circumstances for those with underlying illnesses, mentioning a staffer with a compromised immune system due to a battle with cancer, he also made it clear that everyone wouldn't get the same treatment.
Of course, we're going to entertain special cases, but not the I don't feel comfortable, sorry. Doesn't work that way over the long term.
It's important to note, as the virus has spread, Bank of America has continued to underscore its commitment to the safety of its workers. On April 1st, Chairman and CEO Brian Moynihan, along with the World Economic Forum, wrote a letter to corporations saying that companies needed to focus heavily on stakeholders, with employees coming first. Then on CNBC a couple of days later, Mr. Moynihan said only 5% of the firm's trading workforce was in the office and pledged to do everything the firm could to take care of the firm's workers, including making sure those who needed it were getting the best medical help. In fact, just one day before the March 25th call, Bank of America put into place the ability for its traders to work from home. Even so, Mr. Gallo appeared to send those considering that option a message about how connected they'd be allowed to be.
There is a balance there between critical mass in the office and not critical mass in the office. Or the alternative over time, maybe not the critical, is, if you're deemed critical and you decide to stay at home, then we'll just take your access away. No problem. After a certain period of time. I assume people, when they're staying at home, they're self-quarantining or they're going out for a walk. They're going to the supermarket, so you can catch it at the supermarket. You can catch it at the CVS. You can catch it by walking next to a person.
Bank of America did send us the following statement. I'll quote now. The premise of this conversation is that after a period of time and the government and health officials have said that it is safe, people will need to come back to work, and we know people will have personal challenges, and we will need to help them plan for that. This conversation took place 2 weeks ago when we were establishing new protocols about employees executing trades from home. We have 95% of our people working from home in the trading businesses, including some of our most senior traders. It is also worth noting that other firms have grappled with similar issues. It reveals the immense challenge of the new environment, Josh, that we are dealing with. There was a story in the Wall Street Journal last week about JP Morgan and issues that it dealt with. But what do you make of this story and the recording, the words from this global head of equities?
Yeah, it's a wild story. And, we had sent our people home. First, we made it optional. And then we said, no, we insist. But that was a gradual process. And I think you have to balance, like, obviously that guy is not a medical doctor and should not be leading a meeting about how you can get sick and this is safer than going to CVS. That's obviously absurd. But then part of you, Scott, has to be like, look, this has never happened before in any of our lifetimes. And, people made mistakes as they were trying to figure out the right response, the right rapidity of the response, the right tone. So I think kind of you get a pass a little bit, but yeah, it threatens people's health. So it's a tough story. I'm glad you told it.
Jimmy? Jim? Sorry.
Yeah, look, I've been on plenty of institutional trading floors in my lifetime, okay? The year is 2020, and there is just absolutely no reason to be elbow to elbow with people or even within 6 feet of people. The technology exists to do this remotely. I can't fathom why this fellow felt like he had to have everybody on a trading floor. I just don't get it.
Jenny?
So when I was at Goldman Sachs, I would hear Hank Paulson speak, and then I went to Neuberger, which was Dick Fuld, and those are two very different communication strategies and styles. And when I heard this call, there's a part of me that just felt sad and sorry about it, because I think that finesse, could have changed the way it came across, and maybe the message could have been the same from two different people, and with a different level of finesse, this might have been softer and a kinder feeling coming out of it.
Joe Terranova, lastly to you.
Yeah, I'll just quickly echo what everyone else said. Hopefully this gentleman realized the mistake that he made with his comments, and I applaud you for pointing it out. I think the environment looking forward, because of your reporting something like this, is going to focus on the health for workers on Wall Street, and I think rushing people back into the office obviously is not something we want to be doing.
Yeah. All right, guys, we'll take a quick break. We'll come back. We have final thoughts. Also have some moves that you guys are making that we didn't have a chance to get to, but we certainly will before we go. We're back right after this. Plus, tonight, Jim Cramer interviews House Speaker Nancy Pelosi. Do not want to miss that, 6 Eastern tonight.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
Did you know that there are so many more places to hear TuneIn than on your Alexa? With compatibility on your phone, tablet, computer, car stereo, smartwatch, smart TV, game console, and more, there's a way to hear your favorite audio on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
With so much of our lives spent at home, are you listening to TuneIn all the ways you could be? With compatibility on your phone, tablet, computer, sound system, smart speaker, smartwatch, smart TV, game console, and more, chances are, if there's a time and a place you'd like to hear the TuneIn audio you love, there's a way to hear it on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
Our breaking news coverage continues tonight on CNBC with a special report, Markets in Turmoil. I'll see you at 7 o'clock Eastern once again this evening. We do have some moves that our traders are making, and I want to get to those. Josh, you have what you say double down on store capital.
I did. I doubled my position. Store is a stock that I was happy owning in the 30s, so I had the opportunity at 16 yesterday to double up. And I listened to the chairman and CEO, Christopher Volk, give a talk hosted by Raymond James, and they had done a share sale of $150 million in January, drew down their whole credit facility in early March. So from a liquidity standpoint, I feel comfortable. I don't expect all of their tenants to rebound so quickly, but I think they're already pricing in a dividend cut here, and it's just way too cheap. It's down 54% since the crisis started. So I stood and bought, and I think I'm going to be very happy 3 years from now.
You sold Nike, though.
I did, up 25% in 2 weeks. I don't have a lot of high conviction about people returning to malls or even caring what they look like anytime soon. If it gets back down into the 60s, maybe I'll buy it again. But thanks for the ride.
Yep. Jenny, you sold Caterpillar?
Right. Sold Cat and bought Thermo Fisher. These are opposite ends of the spectrum of what might happen from the coronavirus. One, we think that construction spending will probably remain depressed and tough for a while. On the other hand, medical equipment spending will likely go up. So that's the trade we made.
Joe, quickly, you bought HYG and junk.
Yeah, my buying is a little different than what it was, which used to be Amazon and Apple. It's Wingstop, it's small caps, it's REITs, it's financials, and it's the high-yield ETFs.
Yeah. All right. Let's check the market real quick before we go. We are holding on to gains. Nasdaq's up 1.25%. That's a gain of 1% there. Dow's about 30% up from its March 23rd low. That does it for us. Thanks so very much for watching. I'll see you at 7. Kelly picks it up now.
Thank you, Scott, and we'll see you then. Hi, everybody. It has been a wild day for investors with stocks in rally mode for a second day. And get this, the Dow is now on pace for its best week since 1938. We have nearly 13% gains on the week, and it's a shortened week. We're going to achieve in 4 days what previously took 5. Let's check on the markets right now. We're up 524 points, 2.25% for the Dow and the S&P. The Nasdaq lagging today. It's up about 1.25%. But these gains come despite terrible weekly jobless claims, jumping another 6.6 million. It means in just 3 weeks, 10% of the U.S. labor force is out of work. But the Fed announcing details of its massive $2.3 trillion program today with some new support for junk bonds. That sparked this move higher in stocks. The package includes Main Street lending, payroll protection support, and backing for local governments. The market even shrugging off the Senate's impasse over more small biz relief funds that was supposed to be on the way today. They left town without getting that passed. And on top of all of that, oil extremely volatile as investors await official word on cuts from the OPEC Plus meeting today. You can see behind me the crude up about 2%, so we're well off the spike we had earlier in the session. Let's get the very latest now with Mr. Bob Bassani, who, as always, joins us for that. Hi, Bob.
Hello, Kelly. Good to see you as always. And energy, banks, retail outperforming, consumer staples underperforming. This is very simple. I call it the restart of the economy stocks that are moving today. So there's the Dow Industrials. We're sitting right near the highs. Look at that, over 2,800 on the S&P 500. Take a look at, I call these stocks restart of the economy stocks. Oil stocks like Apache rallying big today. Coals in the retail sector rallying big. The airlines are rallying big. United Airlines rallying. Kimco in the REITs rallying. And even the restaurants like Brinker that owns Chili's, they're rallying as well. How about this high yield move? The Fed shocked everybody and said not only are we buying corporate bonds and corporate ETFs, we're buying high yield bonds and high yield ETFs. There's the high yield ETF on the bottom. But here's companies that are now junk bond status. Macy's, Gap, Delta, Ford. They were investment, no longer. Look at the moves in these stocks today. Tell me the Fed can't move the equities market? Oh, boy, they certainly are. Finally, the S&P 500, Kelly, has retraced 50% of its losses. It moved 1,000 points down from February 19th to the bottom on March 23rd and has now regained almost 500 points, nearly 50%. A remarkable move. And we're talking 2.5 weeks. Guys,
wow.
Back to you.
Yeah, remarkable, and even more so given that time frame. Bob, thanks so much. Our Bob Bassani. Now to the Fed and that $2.3 trillion flood of money Bob was just talking about. They're unleashing it to help support the economy and giving us important new details about who is getting help now. Steve Leisman is here with all of that for us. Steve.
Kelly, thanks very much. Yes, and it's historic, unprecedented, especially to roll all this out in one day. Reserve. piece by piece attacking parts of the credit markets that remain unfunded or where there were potential funding lapses because of the coronavirus and the shutdown in the economy. I'm just going to provide you some of the broader details here. Bob gave you some really important ones I'll come back to in a second. Okay, so the Fed will buy $600 billion in loans that are going to be done through a Main Street lending facility. We'll come back to the details on that. It's expanding the corporate credit programs and this TALF, the Term Asset-Backed Loan Facility, to support up to $850 billion of credit. Inside that is the high yield program that, by the way, the fallen angels are part of that, which are the ones who were investment grade and fell down below investment grade. That's why Ford corporate bonds are soaring today. Fed Chair Jay Powell had a press conference earlier today, a Q&A session earlier today, and he explained the reason why it's incumbent on the Fed and the government to step in this case.
People are undertaking these sacrifices for the common good. We need to make them whole. To the extent we have the ability to make them whole, we should be doing that as a society. They didn't cause this. Their business isn't closed because of anything they did wrong. They didn't lose their job because of anything they did wrong. This is what the great fiscal power of the United States is for, is to protect these people.
So this Main Street lending program, I'll give you a few details off of that. 4-year loans. The principal and interest will be deferred for additional year. It's open to companies with 10,000 or fewer workers, revenue less than $2.5 billion. While businesses of any size can potentially take advantage of this, it's really for medium-sized businesses, ones that have substantial relationships with their banks that could take advantage. The Muni facility will buy short-term notes directly from states and large counties and cities of greater than 1 million people, counties of greater than 2 million people. And there's the TALF, open to AAA tranches of CMBS, and as well CLOs, leveraged obligations. So, Kelly, in your lifetime, in my lifetime, the Federal Reserve going where no central bank or no U.S. central bank has gone before, and we'll see about the operational details that are going to be required to get these up and running and get this money.
Also sounds like they're buying junk bond ETFs outright. That would cover more of the junk bond world than just the fallen angels, right?
Yes, I do believe so, Kelly, and I'll just put an asterisk around that, which is there are, I believe, 5 or 6 term sheets out for the new facilities here, and I cannot pretend to know every single detail. I think you're right about that. It's in the term sheet. I could call it up, but yeah, I think that's right. I was just reading it before we got on this facility here, which says that they will buy. The facility may also purchase U.S.-listed ETFs whose investment objective is to provide broad exposure to the U.S. corporate bonds. Those holdings' primary investment objective, investment-grade corporate bonds, and the remainder will be in ETFs whose primary objective is U.S. high yield. So you are correct, Kelly. That's what the term sheet says, investment yield. There you go.
Yeah, no, Steve, we really appreciate, again, you can see why it's not just the fallen angels, but the whole complex surging on that development. We'll have more in a little bit, but we appreciate it, Steve, very much. Steve Leisman going through all of the details there, and there are so many today. Let's get some more reaction to the Fed's bold moves. Joining me now are Brian Belsky, the Chief Investment Strategist at BMO Capital Markets, and Jason Trennert, who is Chairman of Strategas Research Partners. Welcome to both of you. Jason, your first thoughts on the Fed's move extending into the junk bond space and some huge support for municipal bonds as well.
Yeah, I mean, it's pretty, when you think about the fact that before Bear Stearns failed, 90% of the Fed's balance sheet, which is about $800 billion, was in treasuries. And you think about how far we've come in 11 years, it's pretty shocking. And I can't say I'm thrilled with it in a certain sense, in that, but I also think that it's necessary. I think the Fed's doing precisely the right thing. But theoretically, at least, unelected officials shouldn't be having such a heavy hand in the overall economy as a whole. I think that's very theoretical. By the same token, this is, as Chairman Powell said, this is a decision that this shutdown is largely being driven by government policy. And so, by the same token, it seems only appropriate that the government would compensate or try to ease the pain that you're having on the economy as a whole. Right. But it's just, if you're a traditionalist, it's hard to feel really great about about this because it seems like we're pretty far away from what the initial idea of the Fed was about 100, more than 100 years ago.
It reminds me also a little bit of prices at the gasoline pump, where they rise very quickly, but they fall very slowly. Brian, I'll turn to you on this. The Fed seems to be very quickly able to move very quickly, to help everybody and lend support, but it's very hard to unwind these programs once they've started. I guess from the investor's point of view, from the market side, they probably take that as a good thing, right?
Well, I think so. We go back to what we saw post the credit crisis, where the Fed got involved, and clearly TARP was designed at first for the banks. And if you take a look at when the market actually bottomed in March, financials outperformed for 6 or 7 months, and then for all intents and purposes were dead for 10 years. So is the same thing going to happen this time around with some of these companies that really the Fed came in to really help support, whether or not it's a cruise line or an airline or other kind of consumer thing? That's where you have to really put your fundamental hat on, Kelly, and really see what the wherewithal of these companies are, going forward. We've been on record by saying we still think that the market made a bottom March 23rd. We still said in print that day that the market would rally 40 to 50% because we thought people were way too bearish and making these big depression type calls. But I think Jason made an excellent point. It's how we unroll this going forward. It's clearly not going to be anytime soon in 2020. This is a question of what happens in 2021 and 2022, and what and how the market digests that. But until then, we still think that this monetary and fiscal policy, the response has been very positive to refuel and build confidence back, not only to the consumer, but the stock market.
Right, and we saw the consumer confidence number was awful this morning, so they could use it. Brian, I want to ask you, because you said we had this sharp rally in the financials after 2008, but then they were dead for a decade. Do you see similar trends playing out with the hardest hit sectors here? And I guess another way of saying the question is, where would you recommend investors be positioned? Can you own the S&P 500 index fund and be fine?
Well, we've never been big believers in terms of indexing in general. Part of our job also is to be a portfolio manager, so we clearly default to more active stock picking strategies. I would say this, for 20 years as a strategist, I've talked about how I think there's way too much capacity in consumer land. Maybe this is one of those situations where we take out some of these underperforming companies in consumer land that we don't really need anymore. Maybe we're going to see massive reworkings of how we consume money, Kelly, whether or not it's online or Costco or Walmart, and continue to be that type of strength. I think that the consumer never, ever, ever bet against the consumer's wherewithal, but bet against how these companies are going to make money going forward. And I think that's a very, very key component. So that's why, from a longer term perspective, we are still overweight communication services, discretionary, and technology with respect to our U.S. holdings for the next 12 to 18 months.
Okay. Jason, let me bring you in on that. And again, the Walmart and Costco comps have been fantastic, but I can tell you, even locally speaking, it's getting harder and harder to go to the supermarket. There's, the checkout line, just the whole experience. It's, if there were a way to avoid it going forward, I would. Something that Brian said I thought was interesting. He said for 20 years we had too much consumer capacity. Maybe now is the way to take that out, but not if the Fed's providing support writ large, right?
Well, I still think it will lessen the blow, but by the same token, it doesn't matter what the interest rate is. If there's no revenues, you still can't you don't have the cash flow to make the interest expense. So it will help larger companies with access to more permanent capital. I think that one of the things that will unfortunately be a part of this, and I know they're trying to move heaven and earth to help, which is appropriate, small and medium-sized businesses, local businesses that don't have access to that permanent capital. And there, unfortunately, as much as they're trying to help, the government is trying to help, you really are in a situation where it's very touch and go. A lot of these companies operate with very low margins to begin with. Again, they don't have permanent capital. And so it will be interesting, and we pray that a lot of those companies pull through.
Yeah.
If not, there's going to be an ability for companies that have access to these programs to consolidate a lot of excess capacity, particularly in the retail space.
Yeah, and that's another way maybe to think about it as an investor. We're going to speak with some of these small businesses a little bit later on, but we'll leave it there for now. Thank you both today. Appreciate your thoughts. Brian Belsky and Jason Trenner. Coming up, Treasury Secretary Steve Mnuchin optimistic today about reopening the economy, saying May is a possibility. But Bill Gates says reopening earlier won't get you the economic recovery you think it will. We'll dig into that next. Then Eurasia Group's Ian Bremmer says the pandemic is accelerating geopolitical trends that will redefine the post-COVID world. He joins us ahead. And take a look at shares of the banks as we head to a quick break. They are higher across the board today. Citigroup and Wells Fargo leading the gains today. We're back after this.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving. Soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn from the App Store today.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round.
We're paying for car insurance.
Welcome back. Microsoft co-founder and Gates Foundation co-chair Bill Gates says the economy won't magically go back to normal when people start returning to work. He spoke with our Becky Quick, who joins me now live, Becky, with many of the challenges he sees ahead. He was pretty sober in this discussion today.
Yeah, Kelly, I think he's just being realistic in terms of understanding that the American public has been pretty deeply affected by everything that's happened with coronavirus, particularly in those areas that have been hardest hit by coronavirus. And I think this is a recognition, really, that it's going to take more than just a declaration of all clear for the economy to actually open up again.
No one should think the government can wave a wand and all of a sudden, the economy is anything like it was before this happened. That awaits either a miracle therapeutic that has an over 95% cure rate or broad usage of the vaccine.
Gates thinks that the economy is really going to open up in stages, maybe critical areas first, places like construction and manufacturing, and then maybe schools as well because of the number of young people that are involved there and because young people seem to be much less affected by the coronavirus. So he's hoping that schools, of course, can open by the fall as well. But then when you start talking about other things, maybe sporting events, things that require people to come out in great numbers to arenas or other places, he says that that's going to have to be debated, just the idea of what the risks to GDP is versus what the risk to the American health is. Now, as far as the vaccine goes, they've been working very seriously on this at the Gates Foundation. And one thing that I thought was pretty optimistic and some good news in this is that they have identified at least 20 different compounds. He said 20 compounds that could be very effective as a vaccine. However, the downside to that is he thinks that timeline is something like 18 months before you'll see a vaccine that can be broadly manufactured and rolled out, because you have all kinds of challenges that come with that. Not only just broad manufacturing and enough to make sure that you have 500 million doses or more that can be put out so that you start really effectively vaccinating people, but just the dosages themselves. He said that in general, vaccines are less effective in older people. How you usually get herd immunity is that it's the younger people that the vaccines work on, and that protects the older people, that you have to have much higher doses to make an effective vaccination for older person, and that in turn raises all kinds of questions about how do you get a high enough dosage level so that it's effective for older people without putting younger people at risk, pregnant women at risk, and that's something that he thinks will take some time to figure out. Also, on the more optimistic front, though, something that could come faster, he did say that therapeutics for coronavirus could come at a much faster pace.
Manufactured antibodies are using the blood of recovered patients in order to help treat people who are just getting sick. Those, there's enough of them that in aggregate, I'd say it's very likely we'll have those interventions in the 4 to 6 month time frame. But how much that'll cut the death rate in these overloads, is still a bit uncertain.
And Kelly, he did say that just in terms of when things start to open up for the U.S. economy, he's looking at the end of May at the earliest.
So he's kind of on the same page as Secretary Mnuchin there, but I guess the way that Bill Gates would characterize it is it's going to be a very slow return to quote unquote, anything like normal.
Yeah, he said he's getting his thoughts together in the next week, trying to figure out how we can go about that, a plan that kind of works with that. But he did say it's a discussion that lots of people should be involved in, and this should be a broad discussion with the American public.
All right, Becky, thanks very much. A lot of interesting stuff. We appreciate it. Becky Quick talking to Bill Gates today. Coming up, 625,000 requests and $80 billion in loans. That's what JP Morgan and Bank of America have seen in 2 days for the small business program. We've got the latest numbers, and we'll speak with a small business who's hoping this will help her get her restaurants back on track. Plus, it's all about the math. Unprecedented cuts in the oil market are necessary to bring stability to prices, but will we get them? We'll discuss as the oil price continues to chop around. Remember, you can always watch or listen to us live on the go on the CNBC app. CNBC is back after this.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
With so much of our lives spent at home, are you listening to TuneIn all the ways you could be? With compatibility on your phone, tablet, computer, sound system, smart speaker, smartwatch, smart TV, game console, and more, chances are, if there's a time and a place you'd like to hear the TuneIn audio you love, there's a way to hear it on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state,
Welcome back. Congress just left town today without putting more money into the pot for the small business relief program. Remember, demand has been off the charts. Some 430,000 applications have been assigned that all-important loan number at a value of some $110 billion. But Treasury Secretary Steve Mnuchin this morning reassuring us that everyone will be taken care of.
There are a lot of small businesses out there that this has been a lifesaver. And, the banks have been overwhelmed. So the issue is they'll get to all these customers, and we want to make sure the customers know, whether they're charities, whether they're small businesses, if they didn't have accounts, the banks will get to all of them.
Let's check in with Kate Rogers as we approach the 1 week mark. And Kate, there must be some disappointment that the Senate didn't approve more funds today.
Certainly, Kelly, a lot of concern about that. And for businesses who are still in limbo on that PPP funding, there is another option. It's called an economic injury disaster loan of up to $2 million. That's directly from the SBA to cover emergency expenses like payroll and bills. The SBA had been touting that business owners could get an advance on the loan of up to $10,000 within just days of applying. But much like these PPP loans, business owners are telling us they haven't heard anything from the SBA about these grants. We haven't been able to find anyone who had gotten that funding. The SBA also declined to comment on EIDL amounts and processes after changing its guidance earlier in the week to just $1,000 per employee as a part of that grant program. Now, business owners like Aaron Gerdeman, a gym owner in Dublin, Ohio, are applying for all the aid that they can get and just hoping that something comes through quickly.
I haven't had any clients or generating any revenue since March 16th, and I'm sitting here waiting to see what's going on with the government aid. I'm hoping that we get some of this resolution to this very soon.
Now, a senior administration official tells us that disbursement amounts that we keep asking for from banks to businesses won't be made available for some time. I can tell you, though, I did just get off the phone with a business owner who did get his PPP loan funded in full, $890,000 from a credit union that he's worked with for over 10 years in Salt Lake City. Back over to you, Kelly.
Kate, I'm also thinking, if the Senate didn't approve more money today, and granted, they have more time, but tomorrow is when the next round is supposed to begin with the independent contractors and so forth. It's first come, first served. The one thing I didn't think about as we've been talking about this timeline is that tomorrow's Good Friday. I mean, are people going to be, how are they supposed to even communicate with the banks about this?
So a lot of this is supposed to be done online. Very few of the businesses that I've spoken to have actually gone to a branch to do this. They've talked to their bankers and done everything on the web. Now, as you mentioned, tomorrow's a holiday. I don't know how easy it's going to be to get anyone on the phone. I don't know how many people will be working. The independent contractors and self-employed businesses can apply tomorrow. Hopefully more funding will be on the way. There are a lot of concerns about that. But again, this has been a logjam, a big backlog of loans to get through. They're slowly trickling out. We've talked to 2 businesses now that have gotten funding. We hope the story changes next week, and many more will be in touch with us that have actually gotten this cash, Kelly.
Yeah, no, we really appreciate the reporting. Kate, thanks so much. Kate Rogers with the very latest for us. For more on how that small biz relief program is working, I'm joined by Madeline Alfano, who is the owner of Maria's Italian Kitchen. It's a small restaurant chain in Los Angeles. Madeline, we spoke with you a few weeks ago. Welcome back. And you applied for funding. Have you received yours yet?
Well, thankfully, I work with a great bank, Mission Valley Bank, and it's a community bank. And someone just mentioned that that it's Good Friday, but I can guarantee you that our bankers are working the entire weekend. They worked all last weekend. I put in my application on Friday. I spoke with Daniel Epstein, who's the EVP there. He worked with me on Friday, on Saturday, on Sunday, and on Monday to get to get my application through. I signed it yesterday, and we should see our funding by April 17th, which is amazing. But it's really through the work of the community bank, my relationships, their relationships, my loyalty, their loyalties to the community. They've been amazing. So I hope others have that same experience with their banks the way I do.
And tell us how you'll use the cash as soon as you get it. I know the idea is that you have to use it within 8 weeks, although, I mean, you might get yours relatively early on. Maybe they extend that period. But what's the plan once you receive those funds?
And that's a good question. That's the challenge. So we rush to get the loan, and then you get it, and then you have 8 weeks, and that takes us to the first week of June. So my numbers are, we started out with 348 employees before COVID. We now have 180. Of those, we closed 2 locations, our Oxnard location and our Montana location, which was about 50 3 employees. I think I sent that information to you. But the challenge is that many of them are servers, bussers, those that did not either choose not to come back and take another position or are unable to. So in order for us to bring everyone back, we have to have our complete operation open, meaning full service dining. And that's the challenge. I think there might have to extend that 8-week to about 12 weeks, maybe through the 1st of July. But our hope is that we'll be able to bring back everyone. And we furloughed. And the other thing that we're working on, too, is that the family leave, there's a FC, there's so many initials coming out. The acronyms are beyond belief.
Absolutely.
But we have 2 of our single moms that are going on the family leave program, which is great. So they can stay home and take care of their children, and also know that when they're ready to come back to work and schools are open, we have a position for them. So it's really exciting for me to do that.
And Madeline, we thank you for the update. It'll be very interesting to see how the next few weeks play out for you, and of course, a microcosm of the whole economy. Appreciate you joining me today. Thank you.
Thank you so much.
Madeline Alfano is the owner of Maria's Italian Kitchen. And a quick programming note, House Speaker Nancy Pelosi will join Jim Cramer for Mad Money tonight at 6 p.m. Eastern Time, hopefully with another update on whether more money is coming soon to the small biz lending program. Coming up, global alliances being torn apart at the seams, more infighting in Europe. Ian Bremmer says this epidemic is accelerating the future. He'll join us next to explain. Plus, he's not a household name, but he's making big headlines in the oil world, grabbing the attention of even ExxonMobil. Texan Ryan Sitton joins us ahead with a look at why his ideas are taking the industry by storm.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Did you know that there are so many more places to hear TuneIn than on your Bose smart speaker? With compatibility on your phone, tablet, computer, car stereo, smartwatch, smart TV, game console, and more, there's a way to hear your favorite audio on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Given all the extra time spent at home these days, are you using TuneIn in all the ways you could be? With hundreds of compatible devices, including smart speakers like Sonos, Bose, and Roku, and smart assistants like Alexa and Google Home, there's always a way to listen to the audio you love. Go to TuneIn.com to discover all the ways to listen.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Pandemic Impact, Cutting Edge Solutions, May 12th. Crucial insight from the industry's top minds as CNBC's Healthy Returns Summit goes virtual. Sign up for this complimentary event at cnbcevents.com/healthyreturns.
Welcome back. Stocks continue to move higher. The Dow's now up 565 points. That's 2.4%. Still off the absolute highs of the session, but some pretty nice gains. The S&P up 2.5%. The Nasdaq up 1.4%. It's the laggard today. In terms of the sectors, all 11 are higher. Financials, utilities, and real estate leading the way. 6.5% gain nearly for the financials today. J.P. Morgan, not surprisingly, leading the Dow. Boeing as well. And Disney up there in terms of leadership for the blue chips today. JPM up 10.5%. All of this following the Fed's big announcement this morning. We also have some big moves to the upside in retail with Gap, Kohl's, Macy's, and Nordstrom seeing gains of more than 10% today. And the cruise lines are also surging. Norwegian, Royal Caribbean, and Carnival up double digits, about 20% in Norwegian's case. And finally, take a look at shares of Ford, which are soaring today because the Fed announced it will be buying what they call fallen angel debt, and Ford is among them. The equity up 10% on the back of that. Let's get to the very latest now in the coronavirus pandemic. Over to Sue Herrera for the headlines at this hour. Sue?
Thank you very much, Kelly. Good afternoon, everyone. Here's the latest. The global death toll of the pandemic has now risen above 90,000, with more than 15,000 here in the U.S. It's still ongoing, but moments ago, New Jersey Governor Phil Murphy in his news conference reported 198 deaths since yesterday, bringing that state's total to 1,700. New Jersey also saw a surge of new cases, more than 3,700 in just the last 24 hours. House Speaker Nancy Pelosi says there is still time to negotiate over small business assistance and other measures sought by Democrats. She says Democrats are determined to make it easier for small business to get access to stimulus funds. And as you've probably heard, Pelosi will be Jim Cramer's guest on Mad Money tonight at 6 p.m. Eastern Time. Overseas, Britain reporting 881 new deaths from the coronavirus since yesterday. That brings the country's total to nearly 8,000. Prime Minister Boris Johnson remains in intensive care, but Foreign Minister Dominic Raab says that Johnson is making, quote, positive steps. We expect more on Mr. Johnson's situation in just a few minutes. As always, you can get more on the coronavirus coverage at CNBC by going to CNBC.com. Kelly, back to you.
Okay, Sue, thanks very much. Big business is facing big political pressure to reorganize supply chains to put national interests first, not profits. Is this a glimpse of the future, and what does it mean for investors? Joining me now is Ian Bremer. He's president of the Eurasian Group and G0 Media. Ian, it's great to see you, and beautiful, lovely backdrop, by the way, which is neither here nor there. But listen,
I did it all for you. There you go.
It's really lifting my spirits. But tell us how dramatically you think these trends are shifting because of coronavirus. What's it going to look like in the future?
Well, we're going to move from a just-in-time supply chain to a just-in-case supply chain. That means that we're going to see a lot more production where consumers actually are. China will be less the factory of the world. There's also going to be a lot more inequality in the supply chain because you're going to take a lot of the labor costs out of it. You're going to try to make it more efficient in terms of labor as you have to create more resilience, which itself is more expensive. This is particularly going to hurt the U.S.-China relationship, which was already moving in that direction on the technology side, as you know. Companies like Twitter and Facebook aren't doing business in China, and Huawei is certainly not going to be doing business in the United States anytime soon. That's going to start broadening out to involve both manufacturing and services. Add to that nationalizations and bailouts of companies that are under distress that will have conditionality from the countries that are giving them money, saying you've got 15% unemployment. You have to make sure the people you hire are in the country that's actually bailing you out. Yeah. All of that is moving towards deglobalization.
Absolutely. And it's something I think people are coming to grips with. And in a way, there's not much you can do to invest around this theme. It just tells you this is how the world is going to change. And there are ways that the U.S. could benefit in terms of that industry. But let me ask you about some of the relationships. U.S. and China, you mentioned, that it would hurt that relationship. Europe, they're fighting right now over these corona bonds and, how much the northern countries should be paying for the southern countries. So when we talk about deglobalization, to what point does this, how far does it go?
Well, there's not a near-term risk that the Eurozone falls apart, but this is a global pandemic, right? But the pandemic is the only thing that's global about it. The responses are completely national. They're completely uncoordinated. That's true at the EU level, and it's true at the global level between the United States and its allies. The U.S. is doing an awful lot domestically, even though it's late on the healthcare side. But if you look at the amount of stimulus, the amount of relief you're talking about, the expected stimulus coming down the pike, these are big numbers, and they're important. But internationally, the United States is doing nothing. right? There's a complete absence of leadership. There's no multilateral coordination, not on supply chain. In fact, it's the other way around. We're saying, here are a whole bunch of new PPE that you're not allowed to export from the United States. That's coming down today from the Trump administration. Over 70 countries are doing that. This is a time when you need supply chains to be coordinated, to be maximized for efficiency, to ensure that the goods go at a decent price where they need to go. The response is the exact opposite of that.
And the most interesting thing to me is actually going to be the future of China. So final question, kind of paint this one for us if you can, but you have Japan now paying firms to leave China and relocate their production elsewhere. The U.S. is pushing hard to kind of move along the same trend. So if you're China right now, what does the future look like?
Well, if you're China, there are some countries that are going to be moving away from you and other countries that desperately need you. Let's keep in mind that the United States approach towards allies has been mostly stick. Either come with us or we're going to sanction you. Come with us or we won't share intelligence. China's been offering a carrot. Not much of a carrot, small and rotten carrot maybe, but it's still a carrot. Here's some tests. Maybe they don't all work, but here they are. Here's some medical personnel. We're selling all this stuff. We're giving some aid too. There are a lot of countries that aren't in Japan and America's position that they can pay companies to move back. Most countries around the world are going to be more aligned with Beijing. In descending order, Southeast Asia, Sub-Saharan Africa, South and Eastern Europe, the poorer of the European states, and South America. So coming out of this, much more bifurcation, much less globalization.
Absolutely. It's like breaking apart like the artwork behind you. I'm trying to make some analogy because I just keep looking at it. Ian, thanks.
A lot of fragmentation, deeply saturated.
Yes, fragmentation. Ian, thanks so much. We appreciate it. Ian Bremmer with the Eurasia Group. Still ahead, it would be a production cut the world has never seen before in terms of scope and size. But Brian Sullivan says this is not even a rescue of oil and gas. It only buys time. He joins me next with the latest on the Saudis and Russia reaching a deal in principle. As we head to break, take a look at shares of Disney, one of the Dow leaders today, having a nice gain of about 6.5%. The company says subscription numbers for Disney Plus have now surpassed 50 million globally. Investors like what they hear. We're back in 2.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find answers. And send me your questions on social media at Dr. Sanjay Gupta.
Make sure to search and listen on TuneIn today.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
With so much of our lives spent at home, are you listening to TuneIn all the ways you could be? With compatibility on your phone, tablet, computer, sound system, smart speaker, smartwatch, smart TV, game console, and more, chances are, if there's a time and a place you'd like to hear the TuneIn audio you love, there's a way to...
Welcome back to The Exchange. As more Americans stay home, airports are getting emptier and emptier, as you can see in the images there behind me. Yesterday, there were only 94,931 total passengers in the whole country who went through TSA. A year ago today, it was 2.2 million. The airlines right now are rallying after being down hard this year. American, United, Spirit, and JetBlue leading the way with double-digit gains of nearly 18%. Treasury Secretary Mnuchin saying today that help for the airline industry is the next big thing to be rolling out. And meanwhile, it's been a volatile day in the oil market with crude up as much as 12% earlier to now turn negative on the session just in the commercial break. Investors are still awaiting a decision on a potential production cut from OPEC Plus. That meeting happening right now. Let's get to the very latest with Brian Sullivan. We've had headlines all day, Brian, that sounded hugely promising. And now what?
I'm shocked that we get hugely promising OPEC headlines at the beginning, and then as they all come into a room, things kind of fall apart. Kelly, I'm shocked. It doesn't matter whether you're on a virtual meeting or in a real meeting in Vienna. Listen, this is the way it goes. Let's remember something. We are not talking about oil. I mean, we are, but we're not. We're talking about money, state revenues, government revenues. This is all a conversation about cash flow. Oil just happens to be the source of that. Why has oil turned around? Well, listen, the longer these meetings go on and these flurry of headlines come out, you can be assured that people believe that the differences inside that virtual room may be greater than people think. Secretary General Mohammed Barkindo out earlier today with sort of the introductory speech, some pretty dire stuff. Basically, this is more demand cut than in the Great Recession. That the demand drop is, quote, unprecedented, and available storage, and that is key, is filling up quickly. Okay, from the sources that I have talked to, sort of WhatsApp, texted with all day long, here's a couple things that we can talk about. A deal is likely to be 10 to 15 million barrels. That could be close. Now, it's a huge gap, Kelly. I get it, because we don't know how much 10 to 15 is OPEC Plus, or that includes Brazil, Canada, Norway as well. And here's one major thing. OPEC would like assurances, according to my sources, that the U.S. will cut. Now, we don't have a national producer. We can't just say we'll cut. The closest thing we've got is that guy you've got coming up, Ryan Sitton, that can quota it. So OPEC is worried that just because companies say they're going to cut, Kelly, doesn't mean they're bound to it. But here's what my source tells me. Remember, if Exxon or Chevron comes out and says we're cutting capital spending, they have a fiduciary responsibility to abide by that or come back and change their viewpoint. So we might not have an OPEC, but we have an SEC, and that can do the legal work around making sure companies do what they've told investors they will do.
That's interesting, Brian. And also, as we speak to Ryan, he's not the only commissioner, so he might be backing the idea of forcing these cuts, but it's not clear that everybody else is even on board with that.
Yeah, it takes 2/3 majority. There's only 3 of them, by the way. I mean, never have 3 people, I think, been on the line for maybe as many possible jobs as these 3 folks have. I mean, let's consider every time we talk about rig counts, which are down huge again this week, every time we talk about production cuts, capital spending cuts, it's easy to sit in this office behind a camera and forget that those are jobs, those are families, those are mortgages, those are car payments, those are kids' school. I mean, there's so much on the line here. Either way, OPEC continues to discuss. Tomorrow is G20. Our markets are closed, Kelly, which means the futures markets are closed here too. So we get some giant move in oil prices or big development tomorrow. We won't know until Sunday night.
Wow, that's a great point. All right, Brian.
There's my estimates, by the way.
Put them back up for a sec. Put them back up just so we can get a full look at them. Your estimates for what OPEC may come to, plus other members of the G20 in terms of a cut. If we get that today.
That's 11.75 million barrels, by the way. I'll take how much will OPEC and the G20 cut for 600, and it's probably going to be a daily double, Kelly. Timestamp that. We'll see if it holds.
We will see if it holds. Oil has now turned negative, so investors are getting pretty skittish. Brian, we'll see you again soon. Thanks. Brian Sullivan. For more, I am now joined by Ryan Sitton. He's one of the 3 officials on the Texas Railroad Commission. They are tasked with regulating oil and gas, not the railroads. Ryan, it's good to see you again. And listen, I mean, is this binary on what happens with OPEC in terms of what steps Texas might take?
No, I don't. You said binary, as if they cut, we'll cut, they don't, we don't. I don't think so. In fact, look, we got to look at the landscape. When you look at, if regardless of what happens, inventories are getting so full.
We'll give the shot.
Sorry, what?
Just a second. Ryan, going back to you, so you were just saying, regardless of what happens, inventories are getting so full. So in other words, even if you stop production today, you'd still have an overcapacity problem.
That's right. And once inventories fill up, then what's going to happen is production in the United States is going to drop dramatically. And so there's going to be a reduction in global production very soon. The question is it planned or not? And we're going to see it coming out of the United States, regardless really of whether there are cuts overseas.
Right. And that's why people say, Texas, your commission doesn't need to do anything because the market will take care of itself. They say Exxon's reducing CapEx, production by 30%. They say, like Brian just pointed out, the rig count's down 170 in the past 3 weeks. So do you guys need to step in and do anything, or will the production fall naturally?
Well, as you know, on the 14th, we're having that exact discussion, and I've been getting people from both sides. But let me explain it this way. Once supply chain gets completely locked up, which happens when you have no intermittent storage, now it becomes very difficult to maximize production. So one of the things people say is, look, if we let storage fill up completely, yeah, maybe you don't do anything, but then a refinery shuts down and an oil producer, hundreds of miles away and upstream has to shut down immediately, and it's hard to do. So we'll have a real imbalance in that case. What we're looking for now is people are asking, like, if they prorate or they cut, we start leaving ourselves some intermittent storage, the entire industry will function a lot more efficiently, which is what we need when prices are so low.
Right. So Parsley Energy, Pioneer, they've requested these production cuts. I know you said you're open to the idea, but your fellow commissioners do not necessarily appear to be open to that idea. You guys meet on Tuesday to kind of review what companies like Exxon have said, and Exxon's not in favor of it. The vote would be the following Tuesday on April 21st, and it would only take effect on May 1st, even if you do come to sign some kind of agreement. Is it going to be too late?
Well, I don't think it's going to be too late. It is later than it should be. I mean, if we need to do this, right, which is still the question, then ideally we would have done it, 3 weeks ago, 4 weeks ago. But look, in the middle of this downturn, it's very hard to move fast with new things or new approaches. But you mentioned, look, I think actually the three commissioners are fairly close. All of us are cautious. All of us are free market people. All of us say we want to do what's best for Texans. We want to do what's best for Americans. And so we're evaluating this. No one has come out and said we are absolutely 100% for it. We also haven't said we're 100% against it. My thing is to try to put data out there, and I've tried to speak into this as an option. My big disappointment has been some people have said we don't even want to have the conversation. And frankly, I think that's been short-sighted, and a lot of the market agrees with you.
So we also know, and these projections are super interesting from you guys, you say, look, what happens is with the oil market is contingent on when shelter-in-place orders are lifted. If they are lifted in May, the market could get back to normal by September. If they're not lifted till August, it could take 2 more years. So there is a huge swing for how long we take to get the economy back to normal. I wonder if OPEC doesn't cut it all today, and we've seen the oil price swing negative. If there is no, 20 million barrel cut or anything like that coming, is that going to force your hand?
It's going to force everybody's hand. Let's be clear. That model you're talking about, I reran it last night or 2 nights ago. And I've been running this based on all these different economic models, downturns, unemployment numbers. And if OPEC cuts nothing and we end up sheltering in place through August, I think that the world is going to get down to a consumption level of around 65 million barrels a day. And it's going to stay there for a little while. And once storage fills up, then that's all the world can produce. Well, you say, where's that going to come from? That's going to come out of everywhere. So in the end, everybody's going to cut. If we end up having that scenario, the question is it a planned way or a reactive way? And does it end up really crushing some people while others stay okay? Or does everybody kind of share the load while we get through this downturn? I mean, those are really the fundamental questions.
Yeah, but you're sympathetic to that idea?
To trying to make prorations, to trying to cut?
Yeah, kind of having everybody share it. Remain open to it?
Look, there is, and I think I heard just before I got on, you guys were talking about supply chain. Energy supplies have got to be stable if we expect any sort of rapid recovery out of this recession. And if we lock up the supply chain with no intermittent storage, put a lot of producers out of business, then I am concerned that energy supplies will not be stable. And you'll see massive spikes and falls in oil prices. I think that's bad for everybody. And so I think this is a time with this unprecedented level of challenge on everybody around the world that we would also have an unprecedented level of cooperation. So yes, I am absolutely open to the idea.
All right. Commissioner Sitton, we thank you again.
Thanks for having me.
Hope to check back in with you, Commissioner Ryan Sitton of the Texas Railroad Commission. Coming up, high-yield bonds are surging today. The ETF tracking the sector on pace for its best day since 2008 after the Fed does an about-face and swoops into the market as a buyer. Is it a step too far? We'll discuss. We're back in 2.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Want to know a great way to discover the latest and greatest sports audio on TuneIn? It's easy. Just make sure push notifications are enabled on your phone to receive recommendations of sports talk radio and podcasts, along with important breaking news updates.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted to the beauty and power of the slam dunk. For these and more, search sports documentaries on TuneIn.
With so much of our lives spent at home, are you listening to TuneIn all the ways you could be? With compatibility on your phone, tablet, computer, sound system, smart speaker, smartwatch, smart TV, game console, and more, chances are, if there's a time and a place you'd like to hear the TuneIn audio you love, there's a way to hear it on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
This is Dr. Sanjay Gupta. Join me for CNN's new podcast, Coronavirus, Fact versus Fiction. We know you have questions, and we want to help you find...
For car insurance.
Welcome back. Take a look at the major junk bond ETFs. They are soaring today, up more than 6%. That's their biggest one-day gain since 2008. This after the Federal Reserve this morning said it will extend its asset purchases into these very products, junk bond ETFs. For more on the importance of this move, I'm joined by Tom Kennedy. He's the global head of macro and fixed income strategy at JP Morgan Private Bank. Tom, welcome. And what's your reaction to the Fed's move here?
Hi, Kelly. I'm incredibly impressed. I've been impressed with how fast they're moving, the scale with which they're moving, and now, to your point, the scope. They're widening their footprint into high yield. The most important caveat really was that they are going to
Tom, 1 second. We're just going to have you restate what you just said. The most important caveat is
to handle up nearly 20. I'm sorry. The caveat is the fallen angels discussion.
Yes.
The Fed today is announcing that they are going to support names that get downgraded from IG into high yield. Example today is Ford. Ford 31 bonds are trading 20 points higher on the day.
What would your advice to investors be now?
I think you have to acknowledge that there's a new player in this market. High yield has lagged the rally we've seen in equities for the last 2 weeks. So one of these markets had it to correct. Either equities would have to settle lower or high yield would rally. I think given this rally we're seeing now, you defensively step in. Double Bs look attractive and crossovers given that the Fed is going to be involved in that part of the market.
Do you worry about how long they stay involved and how long to hold these bonds?
Yes and no. Yes, meaning that I don't think they want to have a big footprint in high yield on a go forward, Kelly, but Powell said it today, and as you know, I spent a lot of time with these guys. They're not going to be in a rush to the door. We should assume there'll be players and active in this market for a long time.
Which has some people worried. I mean, they're going to be exposed to credit losses that the Treasury will ultimately have to backstop. There's philosophical questions this raises and so forth, which is why sometimes it's nice to talk to the practitioners who kind of don't have to worry about that. I mean, the message that most people seem to be taking from this is it's a game on for credit, basically of all stripes, and ultimately for equities, right?
Yeah. Yes. I mean, in some regards, the Fed is making it very clear to us that they are not going to let liquidity problems cause insolvency. So when I look at this situation we're in with COVID, we have two problems. The economy is going to be very challenged, and we should not ignore that. But the liquidity crunch that we were experiencing for really 3 to 6 weeks, the Fed has really stepped in and actively told us this is not going to be an issue. And they are pointing liquidity into places that they've never been to, municipals, high yield, investment grade. So they have the ammunition to do it. Yeah. Kelly, one thing to also acknowledge, this feels like they're doing a lot. They've only levered up half of the roughly $500 billion that is in the exchange stability fund that the Treasury's put in there. So they have more they can do.
Yeah, this is just half of what could be coming at us, and it's an incredible amount already. Tom, thanks. We appreciate it today.
Thank you.
Tom Kennedy with J.P. Morgan Private Bank. Well, our breaking news coverage does continue with Power Lunch after this break. We're going to be keeping a very close eye on the oil close. After the last 2 days, energy has taken investors on quite a wild ride. Plus, we'll head to the front lines of the coronavirus crisis. The CEO of Holy Name Medical Center in New Jersey will join us. His hospital is at the epicenter of the outbreak. We'll be right back after the short break.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest
in the car business. At Lexus, we were in the people business.
We needed to be helpful,
respectful,
and compassionate.
To treat people like guests. It's what we all signed up for.
And now when people need this most, we will do what we've always done.
Take care of people first.
The rest will follow.
When you look at the critical issues facing our world, what do you see? We see breakthrough medicines getting to patients in record time. We see harnessing natural gas, unleashing the promise of clean energy. We see engineers simulating the future to improve today. At Emerson, when issues become inspiration, focusing core strengths to create a better world isn't just a result, it's a responsibility. Emerson, consider it solved.
Extraordinary times, unprecedented coverage.
We are far from normal here for this market.
CNBC's Closing Bell. Breaking news, crucial moves in the final hour of trading. Today, 3 Eastern. Watch or listen live on the CNBC app.
Welcome back, everyone, to our breaking coverage, continuing right now on Power Lunch. Welcome, everybody. I'm Tyler Matheson. The Dow up more than 400 points as the Fed unleashes yet another wave of shock and awe on the economy. More than $2 trillion more in programs today to support business and the bond market amid the COVID-19 outbreak. Fed Chair Powell saying the economy and the recovery can be robust. This after another 6.6 million Americans filed for jobless claims. That brings the total over the past 3 weeks to nearly 17 million. And take a look at oil. It was surging earlier, but pairing those gains now, it is now negative on conflicting reports on whether or not OPEC has reached a deal.
Tyler, Tyler, thanks. And we've got all the big stories covered today, crude being just one of them. Look at that. It's down 5% right now. We'll have more in a moment. First, Bob Bassani on the market, Steve Leisman on the Federal Reserve action, and Kayla Tausche tracking the moves in Congress, which didn't happen today. But Bob Bassani, we kick it off with you.
All right, we are just off of the highs. The good news is the beaten up sectors that are rallying have done very well. The bad news is oil is lagging. Just take a look here. Banks, retailers, industrials, there's the markets there, and just off the highs for the Dow Jones Industrial Average. Banks, retailers, and real estate doing well. Energy's been lagging a little bit. We are waiting for details on OPEC and the deal, or no deal. We don't know yet. The bottom line, though, is it's very simple. There isn't much demand in the world, and that's really what's moving things. There's only so far you can go on these stocks. ConocoPhillips went down, into the 20s a little while ago. Dramatic declines there, and so there's only so far you can push them. We've been talking about these high yield movers here because the Fed is going to be buying high yield ETFs. That's good news for those high yield ETFs. On the bottom, you see HYG, but Macy's, Gap, Delta, Ford, all are now in the junk bond category. You see what that news is doing for them. Just note here, the S&P 500 moved 1,000 points from the high February 19th to the low March 23rd, has now moved almost exactly 500 points in the other direction, a 50% retracement of the big moves that we've had. That's a good way to look at the markets. Finally, overnight, SEC gave some major help to corporations, saying we're going to encourage you to tell us everything you know about what's going on with your forward guidance, and don't worry if it changes in a few weeks. We're not going to come after you. They've basically given them a pass saying, just tell us what's going on. Don't worry, we're not going to come back and say you're messing around with our heads if 2 weeks later you say the data has changed. This is going to make, guys, the corporations a lot more willing to be forthcoming on their guidance, I think, in the next several weeks.
All right, Robert, thank you very much. Bob Pisani reporting. Well, the Federal Reserve announcing yet another multi-trillion-dollar effort to stabilize the economy, maybe even help out some corners of the bond market. For the details, let's go to Steve Leisman. Hi, Steve.
Hey, Tyler, another set of jaw-dropping actions by the Federal Reserve going where it has really never gone before, out the credit spectrum, setting up facilities to provide loans directly to companies, at least through the banking system, totaling $2.3 trillion of potential lending from the Federal Reserve. Provide you some of those details here. It's going to have a $600 billion loan program, which is called the Main Street Lending Facility. More details on that in a second. It's going to expand the corporate credit programs and the term asset-backed loan facility to support up to $850 billion of credit. Those corporate facilities, the corporate credit programs, will include high yield and the fallen angels, those who were investment grade. Fed Chair Jay Powell in a webcast at Brookings today saying that there's more the Fed can do and really no limit on what it can do.
Our ability to do that is limited really by the law. We have to find unusual and exigent circumstances. The Treasury Secretary has to agree. And we are using this fiscal backstop. But there's no limit on how much of that we can do, other than that it must meet the tests under the law as amended by Dodd-Frank.
So let's take a look at the Main Street Lending Program that I'm sure a lot of viewers are interested in. The Fed will offer, or the banks will offer 4-year loans, and the banks can then put those to the Fed. It's open to companies with 10,000 or fewer workers, revenues less than $2.5 billion per company, but really the Fed seems to suggest that the smallest businesses should work through the SBA's PPP program, and really this seems more aimed at mid-sized companies. The principal and interest will be deferred for 1 year, and then there's, not to be outdone, the municipal bond facility, something the Fed had never ever really wanted to do. It will buy short-term notes directly from states and large counties and cities, and that TALF again open to AAA tranches of CMBS and corporate loan obligations, collateralized loan obligations. Just so it's going to take some time for the Fed to stand some of these programs up. That's the bad news. The good news is once it gets these programs up and running, they can be lengthened or shortened or whatever is needed. It's only using about 40% of the backstop from the Treasury. So there's more capacity for the Fed to do additional lending if this shutdown continues, guys.
Steve, put it in context for us. How much bigger in terms of tonnage and heft is what the Fed has done over the past month compared with what it did over many, many months in the financial crisis of 08-09?
Well, you just really said it, Tyler. It took months and months and months to roll out some of these programs back in the 08-09 crisis, and they were rolled out very tentatively. The Fed was very scared. It was going into areas it had never gone into before. There was a big to-do about the Federal Reserve buying mortgage-backed securities. Oh, my God, it was involved in credit allocation. Well, buying mortgage-backed securities now is old hat for the Fed. The new hat is buying corporate credit, buying high-yield corporate credit, providing loans. So there's two aspects. One is it's much, much, much bigger, much, much, much faster, and much, much, much wider when it comes to the credit markets.
All right, Steve, thanks very much. Steve Leisman reporting. Well, in the midst of all the market turmoil, it's been a historic week for stocks, if you hadn't noticed. The S&P 500 on track to have its best week since back in October of 1974, and the Dow set to close out its best week since 1938. For more, let's bring in Samir Samana, Senior Global Market Strategist for Wells Fargo Investment Institute, and Ron Insana, CNBC Senior Analyst and Senior Advisor to Schroders. Ron, let's talk about the stock market that people seem to be, I guess, modestly excited about. Are you, or do you think that we're in the midst of a sort of a bouncing along here, a sort of sawtooth recovery in markets and potentially, ultimately, the economy?
Yeah, I think sawtooth is going to be a good way to describe it, Tyler, and for a couple of reasons. Not only have we not yet seen or heard the worst economic numbers we're likely to hear through the course of this period in which the economy contracts anywhere from 30 to 40%, unemployment maybe tops 20%. But I also, and I wrote about this today on CNBC.com, I'm worried about the biologic side, and echoing what Bill Gates had to say. I mean, I would hate to put the cart before the horse. We are now lining up all the financial, assistance that we need to get through this period. Rushing back to work by May, as Treasury Secretary Mnuchin suggested this morning, I think offers the possibility, the danger really, that we have another slide in the economy if people are reinfected. And we're seeing some of that in China now. While we have crested in the U.S. for the moment, there are concerns that this could come back in the fall if it's seasonal. So I prefer to see us stay on the sidelines from a physical perspective and an economic perspective until we're sure that it's safe to go back in.
Samir, let me turn the question just a little bit differently, and I don't mean to be a skeptic here. The amount of fiscal rescue that's been pumped in, the amount that the Fed has done is truly monumental. But my question is the market overreacting to the rescue capital that's being pumped into the system and maybe undervaluing the possibility that this economic recovery is going to be slower and more tepid and more tentative than anybody could imagine? I'm not saying depression, but I'm saying maybe prolonged demand destruction, particularly in the consumer economy, that makes the recovery weaker than some expect.
We think so, and we at least think what's interesting is, we put a number out there for earnings for year end of around 115, which admittedly has a wide error band around it, and might even come in a little bit lower than that. I mean, when you look at where the market was today at the peak, based on those earnings, I mean, you were trading at close to 24, 25 times, and then you've got to have a fairly heroic recovery next year from a forward price to earnings multiple standpoint to justify anything in these areas by year end. So, we did have a year end target of right around 2760. So we think at some point these levels make sense. In the short term, it seems to be more about front running the Fed, which, again, we saw that from October to January when they started to step into repo and expanding their balance sheet. So we've seen this movie before. We know how it ends, and it basically ends eventually with the market succumbing again to the fundamentals, which we just find weak. So we would take this opportunity to sell those areas that maybe you didn't get a chance to. So energy, materials, industrials. We would take this opportunity to kind of shy away from those, even small caps. And maybe you can start to step into some of these other areas where maybe the Fed's starting to give them a nice warm, embrace around high yield. Spreads there are fairly wide. You're at least getting paid to wait. So we actually rolled something out today that took money out of small caps and put it into high yield. We feel like that's maybe a better way until you get to the other side of this volatility.
How about that idea, Ron Insana, of selling maybe some some places where you have losses in your portfolio, culling some of the losses if you now have some, taking out some of the positions that you might not like, and either moving to cash in light of what may be ahead, or moving into some other high-quality areas of the market. What do you think?
Yeah, I absolutely think that's true, Tyler, and particularly in the credit markets. Now that the Fed is buying investment-grade securities, buying munis, I think you buy what the Fed buys for all intents and purposes, and I think there are a variety of vehicles that would allow you to access that. I do believe that that's probably the way to go, and the same is true for equities, that, again, you focus on quality, fortress-like balance sheets, solid prospects in the future. And that's something, actually, we've been discussing now for over a year and a half, which has made sense all the way along. I do think the bigger question with respect to just market behavior is whether or not we find a biologic solution, whether it's a therapeutic in the short run or a vaccine in the long run, that's going to determine really the arc of economic growth and the behavioral aspects of this particular shock that we're suffering through. Some people think it'll be short-lived and we'll snap right back into action. Others believe that it may change our behaviors for some time to come. And I think that's as much as the Fed is preventing a liquidity crisis or a financial crisis, I still think the bigger question might ultimately be both biologic and behavioral.
The behavioral part is a really key part of it. I'm kind of in that latter camp. I think that the changes are going to be profound and lasting. Insana and Samana, Ron and Samir, thanks. Have a great weekend, gentlemen. Kelly?
All right, Tyler, thanks. Let's take a quick look at crude oil right now. This is the story of the day. It's down over 6% after being up as much as 12%. Again, that's an 18 percentage point swing. Why? The OPEC Plus meeting today, it started out with some optimism, but now seeing a number of reports that OPEC has reached a deal on production cuts, but we're awaiting more exact information on the details, the size, and all-important scope. We will bring you the headlines as soon as we can nail them down. Meanwhile, Congress is hammering out details on a $250 billion virus aid package. Kayla Tausche has the latest for us. Kayla.
Kelly, the Senate today failed to advance a $250 billion expansion of the so-called Paycheck Protection Program that the White House had proposed. It was an all-or-nothing vote that Senate Majority Leader Mitch McConnell put forward today, and some Senate Democrats objected. They said they largely support expanding the aid packages, but they want something that's negotiated and includes Democratic priorities as well, and isn't just a clean expansion of the program that already exists. House Speaker Nancy Pelosi echoed that concern as well. In a call earlier today, she said, eventually we will need more money for PPP, but they haven't even spent a third. They have 2/3 of it left, so we have time to negotiate to see if we have more time and money there. Democrats have proposed a different breakdown of the $250 billion. They're proposing $125 billion goes to the program as it stands right now, but then the second $125 billion is divided specifically among community-based banks and disaster assurance that is administered by the SBA. Now, that's not something that has been negotiated between both parties or negotiated between the House and the Senate, but when I spoke to aides earlier today, they said really, if any of these packages are going to go forward, it's going to require the White House to get on the phone with Democrats and figure out what both sides can support and what the White House can give political cover to Republicans to support as well. Guys?
Kayla, this is the first time I've seen you indoors. How bad was the storm?
Well, there was a thunderstorm in the middle of the afternoon. The winds are still whipping outside, but I just wanted to give all the viewers my my home office shot, too. Diversified a little.
I was going to ask for a kid appearance as well, but I don't know if we have that kind of time. But if you can, if she's is she right there,
nap
Kayla?
time. Thank goodness.
That's true. All right. You're saved for now. Thanks, Kayla. Have a great weekend. Kayla Tausche, a quick programming note. House Speaker Nancy Pelosi will join Jim Cramer tonight on Mad Money beginning at 6 p.m. Eastern Time. Tyler, don't miss it.
I will not, Kel. Thank you very much. We've got some breaking news right now. Walmart hiring more and more employees amid the coronavirus outbreak. And let's go to Courtney Reagan for those details and numbers. Hi, Courtney.
Hi, good afternoon, Tyler. So CNBC has learned that Walmart has hired just around 100,000 workers, temporary workers in its stores, fulfillment centers, and distribution centers. You might remember on March 19th, they set out a goal to hire 150,000 temporary workers, some of which may eventually turn into more permanent roles. This is just one of the measures Walmart is taking, as it is an essential retailer, so stores are open. It's limiting the number of shoppers in stores. It's checking employee temperatures, providing masks masks and gloves should employees want that, among many other measures that the company is doing to keep both shoppers and employees safe. And we're going to talk about all of this and more coming up here later in the hour with Walmart Executive Vice President of Corporate Affairs, Dan Bartlett. And we'll get a little bit more detail on these hiring numbers and beyond. Back over to you guys.
Wow, Courtney, thank you. Courtney Reagan. Coming up, hospitals are under pressure as the U.S. now has more than 400,000 cases of coronavirus, trumping the rest of the world. The CEO of Holy Name Hospital Group, in the center of the New Jersey outbreak, tells us what he's seeing on the ground. That's next. Plus, Pfizer taking big steps in its fight against the virus, identifying a new drug with potential to work against the disease. Its chief of research, Michael Dolston, will be here to give us the latest details on this possible breakthrough after this short break.
Like what you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the favorites tab. Pretty easy, right?
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Keep up with everything happening in the wild world of pro wrestling with a TuneIn podcast. For expert analysis straight from the WWE to Steve Austin's no-holds-barred conversations with wrestling's biggest personalities, search sports and scroll down to the world of wrestling to listen.
You love listening to ESPN Radio live on TuneIn, but did you know you can also listen to favorite ESPN shows on demand? Get the latest takes from Stephen A. Smith,
dynamic duos all over the place,
Dan LeBatard, and Garlic and Wingo when it fits your schedule. And listen to episodes of Pardon the Interruption.
Pardon the interruption, I'm Israel Gutierrez, and I love hosting the show with my humble...
Around the Horn and Highly Questionable as podcasts anytime you want. Search ESPN to see all the podcasts on TuneIn.
With so much of our lives spent at home, are you listening to TuneIn all the ways you could be? With compatibility on your phone, tablet, computer, sound system, smart speaker, smartwatch, smart TV, game console, and more, chances are, if there's a time and a place you'd like to hear the TuneIn audio you love, there's a way to hear it on all the devices in your life. Go to TuneIn.com to discover all the ways you can listen.
Hey everyone, it's Tremaine Lee, MSNBC correspondent and host of the new podcast, Into America. In our latest episode, Republican giant and longtime Senator Lindsey Graham is for the first time ever facing a real challenge to his Senate seat. Can a relative newcomer to the scene, a black Democrat in a red state, win this fight? I head to South Carolina to find out. Search for Into America wherever you're listening right now and subscribe.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, explore a sports documentary on TuneIn, like Sports Wars, telling the origin stories of classic rivalries, Raised Sports, about the concussion crisis that threatens football's future, and Dunkumentaries, a podcast devoted...
We've got an update on British Prime Minister Boris Johnson's condition. Sue Herrera here with that. Sue?
Indeed, and we were expecting a statement from number 10 Downing Street. We now have it. The Prime Minister has been moved this evening from intensive care back to the ward where he will receive close monitoring during the early phase of his recovery. He is in extremely good spirits. That is from Tom Hewitt, the Prime Minister's press officer. This comes about an hour after Dominic Raab, who was deputized by the Prime Minister to basically run the government, said that we were going to get a statement. This is very good news. The Prime Minister is out of intensive care, back on the ward, and in very good spirits. A little bit of good news, Ty. I'll send it back to you.
All right, thank you. That is good news, Sue. Really appreciate it, Sue Herrera. Well, the billionaire Bill Gates spoke with Becky Quick of CNBC about the pandemic gripping countries around the world earlier today, and here's what he had to say about coronavirus.
But here with coronavirus, it's quite fatal and quite transmissible. So it's the nightmare that we've been talking about for a long time. And sadly, although a few things like this coalition for vaccines, CEPI, were done after 2015, a very small percentage what we should have done, where we would have diagnostics very quickly, drugs very quickly, and a vaccine far more rapidly.
Well, hospitals in the United States are, of course, on the front lines of the fight, tirelessly treating the unprecedented numbers of patients that they are seeing, many of whom need intensive care. Joining us now is Michael Marin. He's the CEO and president of Holy Name Medical Center. That's in Teaneck, New Jersey, in Bergen County, northern New Jersey, a major hotspot in the state, which now has nearly 50,000 cases. Michael, welcome. It's good to have you here. I want to begin by pointing out that you yourself contracted coronavirus. What were your symptoms? How sick were you? And what did you do to get well?
Well, thank you, Tyler, Kelly. Thanks for having me on. So, yes, I contracted the virus. Unfortunately, I foolishly transmitted it to my wife and two of my sons. So we all tested positive. My symptoms early on were not the typical ones. I never really spiked a temperature. My fever, never had a high fever, never had a low fever. No real respiratory distress, a little bit of congestion in my throat. I did have some GI issues. What really struck me the most was extreme fatigue. And a lot of people are saying loss of smell and taste. I absolutely had that. And so there was probably 3 or 4 days there where I was just sleeping the majority of the day and night, my wife as well. And that was probably the lowest point.
You hear over and over exactly what you describe, and that is extraordinary levels of fatigue, sometimes accompanied by gastrointestinal symptoms. And you were never hospitalized, I take it. You were able to fight it out at home.
Correct. So one of the things that Holy Name has done since the onset of this is we rolled out a very robust, aggressive home telemonitoring program. So we don't just send people home and say, here's your test results and this is what you should do. And if it gets worse, come to the ER. We have nurse practitioners calling you 2-3 times a day, depending on your acuity level. And they did that with me and my family. And so twice a day, we would have to report our temps. We'd have to report our oxygen levels, our blood oxygen levels, our SpO2 levels. And if we got worse, they were going to bring us in. If we got better or we stabilized, they would keep us home. And we're doing that at the high point with over 1,500 people at home. So otherwise, those people would end up in the hospital and be an extreme drain on the already very limited resources.
So take us through some of the numbers that you have seen and are seeing now at Holy Name, which is a very prominent hospital in Bergen County. And finally, as you take us through the numbers, tell us whether you are beginning to see or sense a cresting of the wave in terms of hospital admissions or ICU requirements.
Great questions, Tyler. So we now have seen close to 3,000 people that we have tested. Over 1,500 of them are positive. As I said, over 1,000 of them are being treated at home. We had to increase our critical care ICU beds by a multiple of 6. So we typically would only have 20 ICU beds here. I now have 120. We normally would only have 10 negative pressure rooms within the hospital. I now have 250. So my facility crew here has done an incredible job. They're turning around 40-bed ICUs in 4 to 5 days, new construction. Absolutely amazing feat, but it proves it can be done. And what's nice about these new ICUs is they're all designed specifically to deal with this virus, to keep patients behind a plexiglass wall in a negative pressure area, and to keep staff, IV pumps, ventilators, monitors on the other safe side of the wall, so we're not burning through PPE the way others are. We're allowing one nurse to care much more efficiently, one nurse and physician and their team to care for a larger number of patients in a much more efficient and effective way. So that's helped us a lot. At the peak for us here, we were seeing anywhere between 150 to 200 people a day in our emergency room coming to our outdoor tent for testing. The good news is that has started to slow now. We're only seeing about 70 a day. So it's starting to slow down. A word of caution, we had not seen the wave of seniors that are in assisted living facilities and nursing homes. We know the virus is now present there. It's spreading very, very quickly. I'm very concerned we're going to see that next wave come in here a little bit. And so we're concerned about that. But we have absolutely all our predictive models. We have a very robust data science team. They've developed their own models. They're mirroring that on top of all the other national models that are being distributed. The curve has definitely flattened. It's come down. It doesn't mean the duration of this disease and treating it is going to get any shorter. The social distancing absolutely seems to be working, and we need to stay aggressive with that.
Right.
So we still have a few more weeks to go, but it absolutely is starting to work.
Well, you have just given us the best news we've had all day. And second best news is that you're healthy and your family is recovering. And the third best news is that your staff are bearing up well under incredible pressure. Michael Marone, thank you very much. We appreciate it. Kelly.
Thank you, Tyler.
Tyler, thanks. As hospitals are overwhelmed, pharma giants are stepping up efforts to combat the virus. Pfizer today saying it's identified a new drug with potential to work against this disease. Meg Terrell joins us now with Pfizer's research chief, Michael Dolston. Meg?
Kelly, thank you so much. And Dr. Dolston, thanks for joining us on the phone. You guys came out with a ton of news today. And let's start with the piece about you identifying a new potential drug that may have activity against this novel coronavirus. How does it look like it works? And when could we potentially be seeing it in people and the first results from that trial?
Thank you, Meg. It's so great to be back with you today to share some positive news in these difficult times. As you noted, we are mounting the battle against COVID-19 on multiple fronts. You asked me to particularly comment on the data we have released on our treatments. These are drugs that counter the expansion of the virus, and we envision, if successful, would be given early in the disease process when patients may be admitted to the hospital. We have now been able to confirm potent activity against the virus causing COVID-19 in preclinical screening. And we are pleased to say that the last time I spoke to you, we anticipated to be in clinical studies before the end of the year. Through the dedicated work from our teams, we can now say we think we'll be in Q3, just a few months from today.
In the third quarter. You're also giving a timeline for when you plan to hopefully start human trials of your vaccine candidate with your partner BioNTech by the end of April. Can you tell us what you see the timeline looking like for a vaccine? You know, we consistently hear 18 months. When do you think a vaccine could be ready, and how do you see it being used initially? Will it be healthcare workers, high-risk groups? How will that play out?
Yeah, that's a great question. And I think that's the second piece of really good news today. As we finalized our work, initial work with BioNTech and the agreement that we announced today on this new technology for vaccines to viral diseases, we remain on track to start clinical studies end of this month. But really the additional piece of news that I think is so important is that if successful through the clinical studies and approval by regulatory authorities, we are now in our timelines able to project that we could potentially supply millions of vaccine doses by the end of 2020. So this is much faster than the kind of original projection of 18 months, and it's almost half the time. And why is that possible? I think it's this dream team between a cutting-edge technology company and Pfizer that has for such a long time being a pioneering leader in vaccines, taking them from the research lab to bedside and to providing many millions and in some cases billions of doses. And this is really the team that has that mix of knowing the end game and being technologically cutting edge. And I think that has helped us to see an opportunity to move faster than normally. And I should say we also have gotten some really good dialogue with the experts in the field, including regulatory experts and colleagues at NIH. So we are trying to operate like a one team here.
Well, I also have to ask you about something that wasn't part of your update today, but the LA Times had a story a couple days ago where it mentioned that Viagra, a Pfizer drug that's well known, is being tested by Chinese scientists for its potential use against COVID-19. And that's because it has the ability to open the blood vessels. It's a vasodilator. Does Pfizer see promise in potentially using Viagra to treat this disease?
You know, we welcome creative physicians that are using drugs in a repurposed method, drugs that we know are safe and have been used in so many patients, but maybe for a new indication. And I think we would like to learn more how this can play out in a larger study if this group wants to pursue that. And we're pleased to see that not just Viagra or Revatio that has been used for lung disease, it's the same active compound, but also drugs like azithromycin have been pursued, an antibiotic with potential antiviral activity. And we are really supporting that as a fast response to look at drugs that are already approved. And we are pursuing, as the press release said, also immune modulators like Xelliance that could be useful. I just wanted to punctuate that the second question on the vaccine is so important because in the end, if we want to return life to more normal, in the way we defined normal, that means that we need to protect millions and hundreds of millions of people from being targets of this vicious virus. And it's only a vaccine in the end that can return us to a more normal life as it used to be. Although these medicines that are now coming out are so important for every patient coming into the hospital to have a different choice than just spending time in the hospital. So we welcome that creativity very much, Meg.
Absolutely. Well, Dr. Dolson, we appreciate you joining us today, and we look forward to continuing the conversation with you. Kelly and Ty, back over to you.
All right, Meg, I'll pick it up. Thanks. We've got some breaking news on the Federal Reserve slowing its pace of Treasury purchases, at least for now. The rally losing a bit of steam on this headline, and Steve Leisman has the details. Steve.
Tyler, thanks. The New York Fed announcing it will slow the pace of its purchases next week of Treasuries from $50 billion a day to $30 billion a day, and also reducing the mortgage-backed securities it buys from $25 billion to $15 billion daily. So add the two up, that's $45 billion. It is a reduced pace. It's still quite a bit, but it's actually potentially a positive sign in that the Fed feels less need to come in on a daily basis and buy those securities in order to shore up those markets. Fed Chair Jay Powell talked about that today, that he thought there was better, if there was improvement in the markets, and this is a policy sign or acting out the policy of what the Fed chairman has observed. Tyler?
Steve, thanks. I'll take it.
Okay, thank you, Steve.
Yep. The oil market is also closing up for the day. Let's talk about the massive swings that we have seen in crude. It's plunging now despite reports that OPEC has reached a deal on production cuts. Let's get straight out to Brian Sullivan with the very latest for us. What are you hearing, Brian?
Well, what am I hearing and what am I seeing? First off, to your point, Kelly, I mean, the price of oil is down nearly 6%. We were up 12% at one point today. We were down 9%. I don't know if I can remember a day where the price of oil has swung 20%. It may have gone up or down 20%, but intraday swings truly remarkable. I think a lot of that volatility per our conversation the previous hour, by the way, has to do with where we stand in the negotiations in this virtual meeting, which is still ongoing. So where do we stand? Well, there's a lot of headlines out there, fast and furious. The debate is really settled as to how much they're going to cut. The question is awful.
regionally pre-positioning these ventilators as well, which we've done so that we can save not just a day on the delivery, but quite literally hours on the delivery as those assets are called upon and needed. PPE, again, we mentioned yesterday the significant capacity now for California to procure hundreds of millions of units of protective gear, substantively N95 masks and surgical masks, but also coveralls, gowns, gloves, shields, and the like. I know that people are out there wanting and demanding more PPE in real time, not just our healthcare workers, but our grocery frontline employees, our grocers. We recognize that our IHSS support needs more. Their teams need more PPE, and just want folks to know, soon as we get deliveries, we get them right back out. Quite literally, hundreds of thousands went out yesterday. Every day, we're pushing these things out. The announcement we made yesterday was not immediate. It's over the next few weeks. So over the next few weeks, we're going to start seeing our numbers increase significantly, and the redistribution of those assets in real time throughout the state will also significantly improve. So that's a little bit of an update on the PPE side, ventilator side, update on the overall numbers in the state of California, and some good news on those ICU numbers. But again, just 1 day, 1 point of data. We'll check in tomorrow, of course, in the next few days to see if those numbers continue to show positive signs. I also want to just make a point to those that are anxious on another topic about the delay of the fishing season in the state of California. I may have lost half of you, but if I was watching, I'd start paying attention right now. I'm passionate about fishing myself, and I am getting inundated by people that are concerned.
So you've been listening to California Governor Gavin Newsom giving an update on PPE, the equipment, and how they've been using it in that state. We'll continue to monitor and, of course, bring you any necessary headlines as they are known. One of the big stories, though, today was certainly some action by the Federal Reserve and actually hearing from Fed Chair Jay Powell in a webcast hosted by the Brookings Institution. Let's start right there, a little snippet of what he had to say.
At the Fed, we're doing all we can to help shepherd the economy through this difficult time. When the spread of the virus is under control, businesses will reopen and people will come back to work. There is every reason to believe that the economic rebound, when it comes, can be robust.
All right, so let's break it down with our economics team. We've got them gathered remotely, as we do, as everyone does these days. Kathleen Hayes with us, Global Economics and Policy Editor from Bloomberg. On the phone from Pennsylvania, Carl Riccadonna, Chief U.S. Economist for Bloomberg Economics. He's on the phone from New Jersey. Kathleen, I want to start with you. Hadn't heard from Jay Powell since he popped up on the Today Show a couple weeks ago. We talked to you about that several times. What did you hear from Jay Powell today that was most important?
Reassurance. The Fed is doing what it can. The Fed has done more. For the Fed, it's not necessarily about spending. It's about lending. I think he's trying to, quietly address his concern that maybe the Fed could pick winners and losers with some of these new programs it's put into place. And reassurance that the Fed knows how bad the situation is for the economy right now, how there's going to be not even a thought of moving the key rate above zero until it's clear that the economy is launched into recovery.
Right.
And finally, that he thinks there's a chance, if things go well, that we will see a rebound in the second half of the year. I think that's the kind of reassuring fireside chat that people needed to hear.
Right. As we said at the top of our broadcast, the Fed to the rescue. Again, what we heard, though, the exact words from Fed Chief Jay Powell was an economic rebound that will be robust. Carl Riccadonna, do you agree with him?
Well, Fed to the rescue here, there, and everywhere, we should say, Carol, because it's really unprecedented market action, not just in treasuries and mortgages, but really across the spectrum. The Fed is putting its thumb on the scale in a whole slew of core capital markets. I think that we could see decent economic growth in the back half of the year, but we will still be in a recovery phase because we're going to see a very sharp decline in economic activity in the current quarter, a double-digit decline, probably the worst going back over the entire history to World War II. And so the deeper we go in Q2, the easier it is to get some not so bad numbers in the third quarter and the fourth quarter. But that still will leave us in deeply negative territory for the year as a whole.
And so, I don't know, Kathleen, like, what do we need to hear next from the Fed? I mean, you and others have been hearing pretty robustly from a lot of Fed speakers over the last couple weeks. What do we need to hear next? What else can they tell us to continue this reassurance?
Well, at this point, with all the lending programs they've launched, presumably what the good news would be for us to hear is them acknowledging, then saying, look, these are working. And I think we've already seen evidence that they have worked. I mean, they actually were able to say they're going to scale back the quantitative easing, the bond purchases by $20 billion in the period they're referring to. And presumably that's because they accomplished one thing they were really worried about in mid-February going into March, the Treasury market. It was going crazy. You see more stability, less volatility. So just that action is reassurance that the Fed thinks that's going well. It's clear that they're shifting their focus, though, going to buy corporate bonds below investment grade, some of them 3 levels into junk. Terrific quote from Mark Bittner in one of our Bloomberg stories saying it's not that they're buying fallen angels. Companies brought down to junk status by what's been going on. They're not dastardly devils.
Right.
I think that's the kind of thing the Fed has to tell us.
All right. So while the Fed is out there, action after action, Fed to the rescue, we know the government, Congress has passed that, massive $2 trillion program that included about $500 billion for hard-hit industries. As for the airlines, some headlines just crossing the Bloomberg terminal in a phone call described, I guess, or folks familiar are talking about a phone call that the airlines, I think, had with the government. U.S. Airlines seeking federal aid told it will be another week. Some carriers told of the delay in that call with the Treasury. And what specifically is at issue is the Treasury Department deciding how to distribute about $29 million. So again, this was a call that looks like some airlines had with the Treasury Department, described to us by people familiar with that phone call. So, I understand the government trying to figure out how to, distribute it ultimately. So, Carl, I want to go back to you because you laid out the scenario of what you're expecting in terms of growth or lack thereof. Going to be some staggering numbers. But do you have some confidence because of some of the massive aid packages coming from the government and probably more to come, and the Fed out there doing everything and anything that it can, that ultimately when we do get a recovery, it will be a pretty dynamic one?
I still retain some reserve about that being a dynamic and robust recovery. I think that there's a real risk that we could limp out of this very sharp contraction if we're not successful in containment measures. First of all, if we undo the lockdown too soon and we see another spike, and we're talking about climbing up the curve again and hospitals becoming overwhelmed, that is very much within the realm of possibility if the lockdown does not stamp out the risk of virus spreading again. So that's something that could slow us down in the recovery. Also, it's a massive stimulus package, but it's right-sized if it's delivered swiftly. If we're not delivering it swiftly, then the problem continues to grow and the price tag continues to increase. And so things like unemployment benefits, we're working through those. The checks are arriving. The rebate checks should be arriving soon. But the longer folks have to wait for those funds, the more the economic pain intensifies. And the best example of that, what you just highlighted with the airlines clamoring for the money and having to wait for it, but also with small businesses. The small business loan to grant program is stumbling out of the block. There's tremendous uncertainty. Funds are not being distributed. They don't have enough money in the system. Congress is bungling the passage of augmenting those funds. And so if small businesses are sitting around waiting for the checks, they can only wait so long before they finally have to throw their hands in the air and give up.
And you have the airline sector, Jason, as we know that they're looking out towards summer and they're anticipating cutting, those summer flights up to 90%. They're expecting consumers are going to be slow to come back.
absolutely. And we're seeing that, in the traffic data already. All right. Really good stuff. Thank you so much to Kathleen Hayes, Global Economics and Policy Editor for Bloomberg, joining us on the phone from Pennsylvania, and Carl Riccadonna, Chief U.S. Economist for Bloomberg Economics. He joined us on the phone from New Jersey. What's the market looking like? Yeah, CM?
Jason, we're bouncing around. We're definitely off our highs of the session. We're off our lows. So what does that mean? The S&P 500 is still up about 1%, a 31-point gain. The Dow is up about 1% as well, 259 points to the upside, 268. Again, we're bouncing around a little bit here. NASDAQ just barely higher, up about 0.3%, good for a gain of 25 points. But keep in mind, as Dave Wilson said, we're looking at the biggest rebound weekly gain that we've seen since 1974. So we've seen a big move to the upside this week when it comes to U.S. equities.
Well, and as the market becomes more enthusiastic and we start to think about coming back, part of what is going to be at the heart of this is testing and treatment, therapeutics, vaccines, the medical side. Let's understand that piece of it. For that, we turn to Brian Scorney, Senior Biotech and Pharma Analyst for Baird, joining us on the phone from New York City. So, Brian, you look at these pharma companies, the biotech companies, they are all scrambling, to say the least, all efforts on the medical side of this. What do we need to know? What's the latest?
Yeah, so certainly I think it's all hands on deck. You can't even count this at this point how many different companies have announced press releases with programs to develop something to handle this epidemic that we're seeing. There's a number of things already in development, and there's multiple ways that people are thinking about targeting the virus. I think the most promising in the near term for having an effect is trying to adjust some of the downstream effects of the disease. So, I look at companies like Roche and Regeneron with their drugs that target IL-6, really stops one of the biggest, most fatal manifestations of the disease, which is this over-response to the immune system. I think those are very promising. So a number of companies looking to target the virus itself, stop the viral replication. There's a number of those in clinical development. I think those are a little more ambiguous because, this is a new virus, and we really need to kind of understand what it is and where it's replicating to design something specific for it.
Right. Well, that's what I want to ask you, because if we design specifically a vaccine for COVID-19, if, it mutates, does that mean we still don't have a vaccine for, the mutation? I mean, or if a lot of people have ultimately had COVID-19, we don't know because we haven't done enough testing, Brian, do we all have immunity? And so having a vaccine isn't as important as it once was.
Yeah, so I think that's a great question, and unfortunately, I think at this point it's really too early in the disease to really know what's going to happen. You ask, we're going to start looking at people to see if they're immune, if they've had antibodies responding to this, and their own immune system can recognize it subsequently. We're still in the very early stages. It doesn't seem like people who have immediately been infected are getting reinfected in any large extent. And just based on kind of classical immunology, we would expect that you would be protected to some extent for some, at minimum, short period of time. But is it something like chickenpox, where essentially one exposure gets you lifelong immunity? Or is it influenza, where, see the virus changing and the immune system really can't handle the changes in the virus as it goes season after season? We really don't know. I mean, it's a much different virus than either of those, so there's reasons to believe it can wind up falling somewhere in between. But I think it's very early stage for that. And then the vaccine is, it's sort of the same thing. Is it's going to be something where we can develop a vaccine and there'll be something that gets adjusted every year, or is one vaccination going to give lifelong protection? I think it's just way too early to really know the answer to that yet.
And Brian, help us understand, for those of us trying to get our heads around this, more effort on therapeutics, vaccines, testing, like where are you seeing the most action and where are you seeing the most promise, even from an investor's perspective?
And I'm going to ask you, where do you think, with what you know, just to tack on to that, where should the efforts be placed at this point? Is it a vaccine, or is it dealing with those who come down with the ailment?
Well, I think the most near-term thing that we're going to be able to handle is people who come down with the actual ailment, right? And when you think of what happens to these patients, they get pneumonia, they have immunological responses that, send them in very frequent cases into fatal conditions. There's ways to intervene with the downstream effects of what the virus are causing, and we know a lot of those. And like I said, Roche's Actemra is one way people are exploring it, right? And then, the next stage is to actually target the virus itself. I think we're a little too early for that, but that'll be something that we'll be able to move relatively rapid on. A vaccine, I think, is unfortunately a little bit more of a long-term issue. And again, because you think about what you need to do for a vaccine. For a therapeutic, you're willing to take some risk because the patient actually has the disease itself. With a vaccine, I mean, you're talking about to really maximize your efficacy here. You want to inoculate virtually the whole world, right? So the safety profile has to be really, really very clean. So you really don't want to move too fast with a vaccine. You move very fast with a therapeutic.
And I'll just remind everybody, Jason, some reporting earlier by Bloomberg News just this week, that a potential vaccine is still more than a year away. So despite, some of what we hear in the optimism, creating a vaccine is not something that we can expect anytime soon.
Yeah, no, it seems like testing and therapeutics are the things that are going to be on the near-term horizon. Great context. We really appreciate it. Brian Scorney, Senior Biotech and Pharma Analyst for Baird. He joined us on the phone in New York. Carol?
Yeah, let's get a check on your top business stories and another update on that trading day because, man, Charlie Pellet, we run out of steam here.
Yeah, absolutely right about that, Carol Master, but stocks are higher across the board here. The Dow, the S&P, NASDAQ, all on the green. We had NASDAQ dipping briefly into the red about half an hour ago, but right now we've got NASDAQ up 52. That is a gain of 0.7%. S&P's up by 43, higher by 1.5%, and the Dow up 358, also up by 1.5%. Stocks, though, did pair gains inspired by the Federal Reserve's new measures to cushion the fallout from the coronavirus. Oil fell as investors saw a supply curve proposal as insufficient. West Texas Intermediate crude now down 5.6%, down $1.40 a barrel, $23.67. We've got gold up 2.2%, $16.81 the ounce. 10-year up 16.30 yield 0.71%. The Dow, the S&P, NASDAQ all higher. Again, the S&P up 42, up by 1.6%. Our nurses are on the front lines in the battle against the coronavirus. They are also in desperate need of basic medical supplies. Jason Farley is a professor of nursing at the Johns Hopkins Bloomberg School of Public Health. He was interviewed this morning on Bloomberg Television.
When there is no stockpile, when there is no substantial availability to immediately deploy to these hospitals, and you have an entire health system in a state across every state of the country requesting this at the same time, there's just a supply and demand issue. And so ultimately, all of this has been requested. It's been requested before the curve started rising in these locations, and yet there was just no supply to offer to the demand.
The Johns Hopkins Bloomberg School of Public Health is supported by the Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Sources tell Bloomberg, meanwhile, financially struggling American Airlines counting on a fast turnaround in federal aid to help cover payrolls are now being told they will have to wait at least another week as the Treasury Department makes its way through applications. Among some of the airline stocks today, we have got American Airlines, ticker AAL, up 7%, UAL up 12.1%, Delta up 3.3%, Southwest up 5.5%, and among plane makers, Boeing shares, they're up now by 3%. Recapping stocks higher, S&P up 42, a gain of 1.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week right here on Bloomberg Radio.
It's got to be. Is that Chrissy Hynde?
Yeah, but
no,
she's covering the boss, right?
They are covering the boss. I say they. This is not your typical selection, Carol and Jason.
Okay.
This is a group of musicians, mostly from Italy, that got together and did one of these projects where everybody's at home and they're all doing their parts.
Nice.
Yeah, this is a fundraiser for the Italian Red Cross and an Institute for Infectious Diseases in Italy. The group that put itself together, they're calling it Antivirus Rock Strikes Corona. And, their version of Radio Nowhere is a little bit different, rockier. And, halfway through the song, there's a rap break, and some guy basically tells the story of what it's like to be a coronavirus patient, more or less.
Wow.
They have a GoFundMe campaign associated with it. And I was listening to it when they asked me, well, what song do you want? It's like, okay, we'll take this one. And what I'll do is I'll put up a link to the song and to the GoFundMe on my Twitter feed, just so you all can appreciate it for yourself.
Are there any artists that we know?
No, I mean, it's all local musicians in Italy.
I love that. Okay.
But I thought it was a pretty cool project.
Totally.
Yeah, they have a good sound. I'm pretty
Absolutely.
impressed. All right,
and, there's nothing wrong with giving this particular chart a bit of international flavor because it has it already. And what we're talking about here is the relationship in terms of valuation between the MSCI USA index, think of it as a variation on the S&P 500, and an MSCI index that tracks developed markets other than the U.S. Figured, I saw this report yesterday out of Argus Research talking about how global stocks are supposedly at a discount. Well, yeah, that's been the case for years. So I kind of stood on its head and figured, okay, stocks have come down quite a bit in the past few weeks. So has it affected the relationship between U.S. and international stocks in terms of valuation? And the short answer, as of yesterday, is no. So here's why. What I did is I took a look at what they call forward price earnings ratio, so based on profit estimates rather than past figures for these two indexes, the MSCI USA and the MSCI World ex-USA. And when you run the numbers, you find out that, back in February when stocks were peaking, the U.S. was at a 30% premium by this valuation gauge. And as of yesterday, it was at a 31% premium. Now it had come down as stocks were falling over the last few weeks, and then bounced right back up. So in other words, even though stocks are a whole lot cheaper now, if we just look at the prices, than they were back in February, the valuations, they tell you that stocks aren't really cheaper at this point, at least in relative terms. So if you want to know more, folks, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
So basically the relationship hasn't changed. I mean, the markets have gone all over the place, right? And there's been a lot of volatility, but the relationship between U.S. and elsewhere and the world has not changed that much.
Exactly. U.S. stocks are still expensive by global standards and just as expensive as they were when stocks were at their peak. So, we've had these swings over the past several weeks. You're down, you're up again. But ultimately, valuation, at least this one indicator. Now, there are plenty of others you can look at, but this one sort of basic, looking at future earnings, and we know that the estimates aren't yet really reflecting reality as we know it at this point, but it's sure a whole lot better than looking at past earnings. Put it all together, it tells you U.S. stocks still expensive.
Right. Amazing. Really interesting. All right, Dave Wilson, we'll talk to you just after the close of trading. I have to say, one of my favorite sort of Zoom contributions to all this, Zoom musical contributions, was more of a parody, not a cover. Staying Inside, which is a parody of the Bee Gees, Staying Alive. It is really good. I don't know if you've seen it. It is outstanding. Really, really good. Really good musicality, as they say. I love it.
I agree that
I sent it to one of my uncles who's a huge Bee Gees fan, has gone to London to see the Bee Gees back in the day. He loved it.
I have to say some of the music that has happened and come out of this and the collaborations are just so clever and just well done. All right, let's get back to World and National News headlines. We've got Bob Moon tracking that for us. Hi, Bob.
Okay, Carol, after 3 days, British Prime Minister Boris Johnson has been moved out of intensive care, according to his office. A spokesman at 10 Downing Street says Johnson will continue to be closely monitored, quote, during the early phase of his recovery, unquote. Dueling portraits are being painted in New York, good progress and a lot of pain. 18 days after Governor Andrew Cuomo largely shut down the state, the number of newly hospitalized coronavirus patients was the lowest in weeks. He credited widespread cooperation with social distancing restrictions.
The flattening of the curve last night happened because of what we did yesterday and the day before and the day before that. This is all a direct consequence to our actions. If we stop acting the way we're acting, you will see those numbers go up.
At the same time, the number of people dying of the virus is still growing, 799 people in the last 24 hours, a new single-day high. After a defiant President Trump ousted the head of the newly formed Pandemic Response Accountability Committee, we're now hearing House Democrats are trying to get him reinstated. Bloomberg's Amy Morris reports.
It did not take long for House Democrats to introduce legislation to reinstate Glenn Fine as head of the new Pandemic Response Accountability Committee. They introduced the bill after President Trump demoted Fine to Deputy Principal Inspector General, effectively removing him from the committee that will oversee the $2 trillion in federal coronavirus relief. The watchdog group Citizens for Responsibility and Ethics in Washington accuses the president of using the pandemic as an opportunity to consolidate power and curb oversight. In Washington, I'm Amy Morris, Bloomberg Radio.
Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Bob Moon.
Asset managers who seize change to launch new strategies, add distribution channels, or exploit new technology to re-engineer the investor experience are often rewarded. However, in an industry paralyzed with complexity, few act with agility or decisively. Few run their business strategically. Yet, the most competitive managers in the market know with the right partner and a flexible operating platform, you can. Go boldly toward change with SEI Investment Manager Services.
I'm Steve Meyer, president of SEI's Investment Manager Services. At SEI, we understand the emerging forces that will define success for asset managers and what firms will need to compete tomorrow. That's why we continually optimize SEI's global operating platform. If your business requires greater agility, our advanced technology, integrated best-in-class systems, and multi-asset expertise can be your catalyst for business transformation.
With SEI Investment Manager Services, you lead the charge in a competitive marketplace. Learn more at SEIC.com/seize change.
Business is constantly evolving. Is your financial printer evolving to keep ahead of the curve? At Command Financial, we are redefining financial printing by providing industry-leading expertise, leveraging technology, and honing processes and best practices. Every day, Command helps SEC registrants, as well as members of their working groups, including securities attorneys and investment bankers, prepare, file, and disseminate regulatory and disclosure documents, such as registration statements, M&A documents, and mutual fund prospectuses and reports. Command provides a full range of services to help you effectively complete your deal, meet your disclosure requirements, and achieve your shareholder communications objectives. Visit our website at commandfinancial.com and learn how we're evolving, not only with the times, but also with your business requirements. Command Financial, redefining financial printing.
In-depth analysis.
This week at Tesco, large Easter eggs are 3 for £8. And we've got a large choice too on all your favourite brands, including Terry's Chocolate Orange, Cadbury's and Maltesers. At 3 for £8, why shell out more? Tesco, every little helps. Available in the majority of larger stores and online. Delivery charges may apply until 13th of April.
Are we at war with COVID-19? The metaphor of choice is framing the way we confront the crisis, and not in a good way.
This virus does not have intent. It can't be negotiated with. There will be no truce.
Also, in this time of national unity, should celebrities just shut up? Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
TuneIn makes it easy to be a part of the conversation. Just make sure push notifications are enabled to hear about breaking news and trending topics from around the sports world. You'll also get custom recommendations of podcasts and radio stations covering the sports and teams you care about. Get your MLB fix with these great podcasts on TuneIn. Fill your 7th inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting 9 podcast.
Nolan Arenado slides right into the top spot for a favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is, we've been waiting a long time for this. We actually, in terms of active
Round the Bases with the StatCast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks, Mike took Barry Bonds, who I think was kind of the obvious guy to take number one, not only.
Catch these and more MLB podcasts right here on TuneIn.
Get the latest breaking news alerts and listening suggestions for new stations and podcasts. Let TuneIn keep you in the loop with push notifications. Just go to your device's settings and allow push notifications from TuneIn to get live alerts and recommendations on the audio you want to know about.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
It's TuneIn Sports on this day. April 7th, 2019, retiring NBA legends Dirk Nowitzki and Dwayne Wade play their final home games, both resulting in victories.
And now, your greatest maverick, Dirk Nowitzki.
And the Heat certainly want to win it for Wade here at home in his final game in this building. To listen to conversations breaking down the moments just like this, search sports to be part of the discussion on TuneIn.
Behind the highlight reels, championship rings, and colossal paychecks, there are sports stories that fuel, deepen, and even challenge our love for the game. For true tales of underdogs, anti-heroes, and game-changing innovators, search sports documentaries on the TuneIn app.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 13 minutes to go ahead of the closing bell. The Dow, the S&P, NASDAQ, all pushing higher. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is working from home, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading off of session highs amid a drop in oil. Dow's still up 350 points. S&P's gained 43 and NASDAQ climbs by 54. The U.S. 10 yield at 0.72%. WTI crude futures fall 6%. Small caps are up 4.6%. And semis are under pressure, down 3%. Leaders to the upside in the Dow, J.P. Morgan, Travelers, and Home Depot, while Intel fell 4.7% and led to the downside. In other news, the Fed slowed the pace of Treasury buying to $30 billion a day from $50 billion a day. And in the energy space, the Saudis and Russia to both cut oil output to 8.5 million barrels per day in a deal. Wrapping things up, Disney rose 3% after Disney Plus racked up 50 million subscribers in 5 months. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg-type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
It is time for the Drive to the Close. We're just minutes away from wrapping up U.S. trading in this holiday-shortened week. Back with us is Wayne Wicker, Chief Investment Officer at Vantage Point Investment Advisors, $29 billion in assets under management. Wayne joining us on the phone from Washington, D.C. Man, the markets, depending on the day, depending on the week, were either up a lot or down a lot. Wayne, how do you approach this type of market environment?
Boy, Carol, this is as volatile a period of time I've had in my 36-year career. And I think that it's reflective of the fact that because of the health crisis that's driven this problem, we just don't have a lot of information from day to day. And so, I think the best approach to take in a period like this is to have a very long-term orientation and anchor to a horizon that's probably 2 or 3 years out, because you just can't manage this day by day the way the volatility is today.
Yeah, it's interesting. My favorite quote of the week so far, maybe you're going to win the rodeo here, Wayne, was from a guest around this time yesterday who said, treat your 401k like you treat your face. Don't touch it. Just leave it alone and just kind of ride this out. And I do wonder whether enough people are going to follow that advice. And I guess I would ask you, is that the right advice at this point?
Well, I think that folks that have a 401k plan, which is all of us, hopefully, are in the best position to ride out the volatility that we have here. And the reason I say that is because of the systematic way that we continue to deposit money every couple of weeks. So you're going to average in on this volatility over a long period of time, because nobody's going to know where the bottom is or if its bottom's already in. But if you continue to participate week by week over a 2 or 3 or 4 year period of time, I think you'll be well rewarded.
I got to say, there's part of me, I was reading something in about the wealthy who are, is it selling off assets or real estate? I think it was on the Bloomberg, and then using that to buy stocks and buy into the market right now because, names have taken such a beating. Not everybody has that luxury. Most people do not. But I do wonder, Wayne, if we do look back at this time and say, boy, it was a great, buying opportunity. I feel like anytime things are beaten up disproportionately to what ultimately will be the longer term impact, it is a great buying opportunity.
Yeah, Carol, I think that'll be true if you have the look back probably 2 or 3 years from now.
2 or 3 years, wow, that's a long time.
Well, the reason I say that is because over the next few months, we could experience as quickly as we've come up, and you mentioned it earlier, it's, we've had a 25% gain in the last 12 trading days. We can get other news that the market could trade on that can take us back down by 10, 15%. So I think in the short run, it's going to be a little bit more challenging for individuals to identify names. But clearly, over more than a 12-month time horizon, I think you're right. This is going to be a period of time where, at a minimum, you've been able to upgrade your portfolio in terms of the quality of the companies that you want at prices that are more attractive than they were just 60 days ago.
So, Wayne, having, as you said, seen some volatility over your time, seen some crises, I do wonder, and this has been top of mind for Carol and myself, I think especially today, having heard from Jay Powell earlier, having seen again the power of the Treasury Secretary in both sort of coming up with a lot of the fiscal side solutions and then executing them. What do you make of the fiscal and the monetary response from the U.S. government so far?
So if we compare this to the 08-09 time period, the response by the Fed has been unbelievable. I mean, I think they have come in, they've been rapid in terms of their reaction. Jay Powell, I think, has done a really good job of, trying to ensure what he's supposed to be doing, which is maintaining the financial stability of the economy. And so in light of the fact that this is driven not by the same types of factors as 08-09, where we thought, gosh, is the financial industry going to be around? This is a more open-ended problem with the COVID-19 issue. And so they can't help that catalyst, but what they can do is provide a significant bridge to help get us to the other side of the unknown duration that we are currently experiencing.
And the fiscal side, how do you feel about Mnuchin and Co.?
I think they've done an absolutely great job. They have identified a lot of places which are going to be, I think, very weak coming out of this 2 or 3 month period of time. And they've tried to come in to provide a backstop that in the short run, I think, is going to be critical for retaining some investor confidence. Now, I think later on, at some point, we're going to have to figure out how we're repaying all this debt that's going on. But I think in the short run, investors are really enthusiastic enthused about what has been going on. I think later on the reality of the economics that the Fed is trying to solve for will come back.
So it sounds like you're not doing any buying for your clients, and correct me if I'm wrong. Is that the case?
Well, we're always in the market, and so we tend to run fairly fully invested portfolios. We have a slight cash buffer.
Yeah.
But
so what are you buying? So what are you buying right now, Wayne?
Well, we have 31 different funds, so you can pick your flavor. But I think that in general, the tilts in the portfolios are still more growth-oriented rather than value-oriented. Yield is not actually being rewarded in this environment, nor is low-vol types of strategies. When growth goes to negative numbers like we have today, investors are going to tilt towards those companies that have the best growth prospects, and so that has translated into our portfolios to having more of a growth orientation at the present time.
All right. Well, we wish you only the best, Wayne, and hopefully, as they say, next time in the Bloomberg Interactive Brokers studio, hopefully we'll be seeing you then. In the meantime, stay well, stay healthy. Carol, holding on to gains here. We have bounced around a little bit, but we didn't see I was a little worried we might see a rapid sort of decline here, especially because we are going into a long weekend. The U.S. markets close tomorrow in observance of Good Friday, so we'll keep an eye on it.
I think it's a strong sign. I mean, we're up about 12% on the S&P 500, give or take a little bit. I'll have those final numbers for you after the close for the week, so that we actually still held on to some gains here on this long holiday or ahead of the long holiday weekend. Jason, I think you make a really smart point. All right, stick around, everyone. We are going to have those closing numbers for you. Also, some of the stocks on the move right here on Bloomberg.
The starting.
Where will 2020 take you? Somewhere where people care about each other, about our planet, about creating a better world for everyone, and becoming the best versions of yourselves. Join a community of like-minded individuals at the University of Winchester. Make sure to accept your offer by the UCAS deadline and visit our website to find out more. See the bigger picture. Be the difference. Go to winchester.ac.uk.
Typical Danny. Imagine trying to unwind at a spa weekend and you wind up getting your mud pack all over your fave personalised dressing gown. But no worries, just one wash and my clothes will smell perf with Surf. Surf gives you long-lasting fragrance with natural essential oils. Find your fragrance in Surf's laundry range.
Because you can't watch Trolls World Tour at the cinema, Sky Store is bringing the cinema home to you with Sky Store Premiere.
I'm going to destroy all music except for rock.
We need to unite the trolls to save all music.
Our brand new service that lets you watch movies at home that would normally be in the cinema.
Rock and roll! Let's go save the world!
Yes! Prepare for battle. This ought to be good. Enjoy Trolls World Tour now on Sky Store Premiere, bringing the cinema to you.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Of the world, 24 hours a day at Bloomberg.com, on the Bloomberg Business app, and on Quick Take by Bloomberg. This is Bloomberg Radio.
Stay on the move.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. There you have it. Sound of the closing bell at the New York Stock Exchange. We wrap up trading on this Thursday, April 9th, and it is on to the weekend for a lot of people. 3-day weekend coming up. The Dow, the S&P, and NASDAQ all advanced today. Stocks rose for the third time in 4 days on the week. S&P up by about 10.4%. Investors look past staggering jobless numbers when the Federal Reserve released new measures to cushion the fallout from the coronavirus. Oil fell as investors saw a supply curve proposal as insufficient. The Dow, the S&P, and NASDAQ all surging today. S&P up 39 points, up 1.5%. NASDAQ up 62, advancing today by 0.8%. The Dow up 281 points, up by 1.2%. And again, on the week, the S&P 500 index did advance by just about 10.4%. What about the market mood? Wayne Wicker is Chief Investment Officer at Vantage Point Investment Advisors. He was our guest moments ago right here on Bloomberg Business Week.
You know, I think the best approach to take in a period like this is to have a very long-term orientation and anchor to a horizon that's probably 2 or 3 years out, because you just can't manage this day by day the way the volatility is today.
And again, S&P 500 index, as the numbers settle here, surging 12% in the week, biggest gain since 1974. Major oil producers have agreed to slash output as feuding members of the OPEC Plus coalition buried differences in an effort to lift the market from a pandemic-driven collapse. We did see oil moving lower today. West Texas Intermediate down 6.2%, taking a lot of the oil majors with it. ExxonMobil, for example, down 1.7%. Chevron lower today by 1.9%. Again, gold up 2.4% at $16.84 the ounce. Recapping on the equity numbers here, S&P up 39, a gain there of 1.4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Jason Kelly on Bloomberg Radio.
All right. Thank you very much, Charlie Pellet. Let's take you to Connecticut now. The state's Governor Ned Lamont giving an update. My apologies. Apparently, the governor has not started his remarks. So let's talk about what happened in the market today, Carol Messer.
All right, Jason Kelly, let's do that, because as Charlie mentioned, what a week it was for the markets overall. We certainly did see quite a bounce back when it comes to those equity averages, and we've seen the volatility to the upside and the downside. And this week it was to the upside. So the 5 days 4 days for the Dow Jones Industrial Average, it was up almost 11%. The S&P 500 up more than 10% for the week overall, and the NASDAQ up about 9% for the week overall. I was just going through some numbers, too, because year-to-date, the S&P is still down 13.6%. Dow is down 17% year-to-date, and the NASDAQ so far in 2020, Jason, is down about 9%.
All right, now let's go to Connecticut and that state's Governor Ned Lamont giving an update.
Move that one over. Thank you. You can see Fairfield is still the highest, New Haven and Hartford. Next slide, please. This next chart we've gone over before. It's the COVID hospitalizations. Again, it's not a hockey stick. It's linear, and you can tell by the bottom line that the rate of increase in hospitalizations is not going up. And in fact, it may be going down a little bit. And what that says about the fact we may be reaching a peak. Hospitalizations by county, now we're getting more interesting. As you can see, some interesting evidence here. Most interesting to me is that top line, which is Fairfield County. And Fairfield County, as you know, was the county first hit. Probably they have a week or two ahead of, say, New Haven County. What you'll see at the top there on Fairfield County is not only is the hospitalization line flattening, it's down slightly, and I mean slightly. But the net increase in hospitalizations in Fairfield County, which was the most severely hit of our counties to date, hospitalization was down by one. That means there's one less occupied bed today than there was a day ago. And as Josh reminds me over and over again, one day does not a trend make, but it is a glimmer of hope that perhaps we're reaching a peak in Fairfield County and what that says about the future. This next chart is interesting. It's admissions and discharges now. And you can see that, maybe you can't see, but let's say we've had 3,000 total admissions to date since we got hit by this virus about a month ago. And of those 3,000 folks that were hospitalized, went to the hospital, 1,250 have been discharged. So about 42% of the 3,000 folks that have been hospitalized today have already come out. They're on the mend, we hope, and healing at home, and last of their self-quarantining. Tragically, about 10% of the people who go to the hospital died. And that was a fatality number that we've been tracking carefully. We talked about that a little bit yesterday in terms of how it impacts different communities. Let's go to the next chart, I think. The next chart is, I really wanted to get into PPE. We talked about this yesterday, the protective gear. And what a mess it's been out there trying to get the protective gear. What this chart shows you is that we've been inundated with folks who have had access to protective gear. Protective gear being everything from the masks, the gowns, and you know, of those 1,000 plus that were identified, a lot of them were pretty shaky, to tell you the truth. They seemed to have a friend of a friend who knew somebody in the Ukraine. But of those, we sourced 259. We validated them. We've had 20 or 30 people doing this nonstop, 12 hours a day. And we placed 78 orders to date. And those orders are beginning to come in. Those orders are beginning to come in. Next chart, please. This tells you a little bit about what we've ordered and what we've acquired to date. You can see we've ordered about 19 million pieces of PPE, starting with respirators, N95 respirators. We got 200,000 N95 mass respirators yesterday, and those are getting distributed as we speak. And fortunately, our hospitals are also able to get a lot of their own PPE themselves. So that has given us a little bit more flexibility to get this out to first responders, nursing homes, all of our different folks in the commissions who are front-facing. We have 11,000 employees, state employees, who are still working every day, be it corrections, be it mental health counselors, and others who are on the front line. And these are the folks who are making sure we're getting the PPE, the protective gear they need. And a little bit of good news. It's sort of just-in-time inventory, I'm afraid, because we don't have much capacity, not much of a stockpile there, but people are managing their flow of PPE really well. And we went through all the commissioners this morning, and everybody has a stock, at least to keep their people safe going forward. You heard from Barbara yesterday in terms of the nursing homes, and most of them are managing their supply of gowns and masks really thoughtfully. And obviously a few of them are not, and we're targeting them, reaching out, finding out who they are, getting them the supplies they need, and see what better protocols we can do for people. And the protocols are a broad mix. I mean, obviously, when we have COVID-only nursing homes and COVID-only correctional facilities, that saves a lot of protective gear as well, since you don't have to change it constantly as you go from non-COVID to COVID-related space. We're doing, as I said the other day, the same thing with the homeless. So I feel that we're managing our PPE really well at this point. And I think that within the next week, 2 weeks, this supply of PPE that's on order, we have a high degree of confidence. Josh has a high degree of confidence. We know the orders are coming in. I know you've heard me saying today, get redirected at the last moment, but now as supply is beginning to catch up with demand, and we'll be able to get that stockpiled out to you even sooner. And then broaden the lens of people to get the PPE as well. So it's not just our first line responders, but let's say food service workers and daycare and others who are on the front line as well, and give them more protection as we see this peak going across the state on a further basis going forward. I mentioned to you that we have, 11,000, state workers still frontline going out there. We're going to have a terrible storm tonight. And that means we have, hundreds of extra utility folks who are also working their heart out every day, getting them the gear they need just to make sure we can keep the power going for you. So this is a government, this is an economy that has to keep moving despite what you see from COVID and what we're trying to do. A couple of other touch points. Food. We've talked a lot about food. You've read some of the articles in the national press about there's some food supplies that are being constrained right now. Not as much donation of foods, not as many restaurants open to give people food. Our supply of food right now is pretty good. I'm afraid that our food share and food bank have to buy a little more of their food than they had to before. Less of it is being donated, but our shelves are stocked at the grocery stores, and we do have the food at our food share, food pantry as well. I want you to know that. I know that there's such distress when it comes to, food insecurity. Susan Beiswitz and our Commissioner of Agriculture were at one of the food distribution places the other day, a depot, and I was told that there were 1,000 cars lined up over the course of the day there. And that's why Lisa Tepper Bates and others are trying to get volunteers and others to help in the sorting of the food and the distribution of the food. The small business loans, I'll give you just a brief update on that. We talked to thousands of small business folks today, including our representative from the Small Business Administration. Little credit where credit's due. The Small Business Administration has been very collaborative with us. We all have some catching up to do when it comes to the technology and getting these things processed. But for our loan program, that short-term loan program is a bridge to the federal loan. We've had several thousand, we've had 5,000 applications. Several thousand will probably be accepted. We have a new fintech partner that allows us to electronically process these loans faster. And David Lehman believes we'll start getting those checks out to you over the next couple of weeks. For the federal PPE, the Paycheck Protection Program.
So you've been listening to Connecticut Governor Ned Lamont giving an update on the virus, certainly the efforts and what's going on in his state. We'll continue to monitor as we do all of these press conferences, bring you any headlines as they are known. We do also want to mention another headline. European Union finance ministers, they have agreed on a $540 billion euro, that's $590 billion U.S. package of measures to combat the economic fallout of the global pandemic, putting to rest really some concerns that the bloc would fail to unify behind a common strategy. And we know, Jason, it wasn't easy getting to this. They were, kind of back and forth about what it should be, what it should do, so that they actually got it to the finish line. Is a big deal.
Well, you think about how fractious, to say the least, that the European Union has been, and maybe even fractured if you figure in Brexit. This is something, a region, a collection of countries that has had a tough time getting on the same page. And also, when you think about how individual countries have handled this crisis, Spain versus Italy versus Germany versus the UK, although the UK is obviously not in there anymore. But, it's a tough thing to get everybody on the same page for sure.
And let's not forget that the bloc's leaders now have to debate it, fine-tune it, and eventually endorse the plan. That meeting could happen as soon as next week. So it's not a done thing. It's just one major step toward the adoption of such a package. But nonetheless, it's an important step. So certainly important. All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. We were talking about the markets, and I do want to go back there because I think this is important. This is a health crisis, but we've, of course, watched the connections with the markets. And I just looked at the major industry groups, Jason, in the S&P 500, and we saw gains, pretty broad-based gains in today's trade. Charlie broke down the strong gains that we had for the week overall, 10% higher on the S&P 500. Financials, real estate, your top performers, they were each up more than 5%. The only group that lagged today were the energy names. They were down about 1%. So a little bit of a lag there. And I do want to point out we've had quite a bounce back year to date. We're still down about 13.6% on the S&P. Dow is still down 17% for the year. NASDAQ down about 9%, but we are up 25% from that March 23rd low on the S&P, up 27% from the March 23rd low on the Dow, and we're up about 19% from that same low on the NASDAQ. So quite a bounce back.
Yeah, absolutely. I mean, and this has been a week where we've seen a lot of enthusiasm, and, hard to imagine a couple weeks ago that we would have said that your biggest gainer in the S&P today, the Gap.
Yeah, right, go figure.
But for the fifth straight day, that stock rose, so leading the way on the S&P on a largely green day, as you said. So in any case, some names that we will continue to keep an eye on for sure. Kohl's, KSS was also one of your big gainers in the retail space.
I do want to mention the volatility index report, if I may. So the VIX, no surprises, we saw stocks move higher today. The VIX finishing the day down almost 4%. And let me just take a quick check for the VIX for the week overall. It was down, Jason, about 11%, closing at 41.67. So we have moved off dramatically off those high levels for the VIX. All right, you are listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for a price on Wilson.
Open up the door, it's Dave. Who? Dave.
Hey, Mr. Wilson, Dave Wilson back with us. And I have to say that lead into Dave Wilson, I just listened to a long podcast about the movie Castaway, which is what you hear a clip of. Wilson, where are you? We know where Dave Wilson is. He's in New Jersey. He's got a stock to talk to us about. Yes?
Can I just say it was a question on Jeopardy recently, and it was a younger group. I think it was the college tournaments that they were playing, and they didn't know. I think two of the people didn't know. One
they didn't know about Wilson the volleyball?
Yeah, it was like, what was the name of the volleyball?
And only goodness. I weep for the future. All right, Dave Wilson, we know you, and you're here with us with your stock of the day. What you looking at?
I'm looking at Big Lots, Jason. It's a closeout retailer that sells everything from household basics to toys, seasonal products, and furniture. Big Lots was founded in 1967 and has used the corporate name on all its stores since 2001. The company has been public since 1985. The ticker is BIG, B-I-G. Big Lots shares peaked in January 2018 and have fallen as much as 84% in response to disappointing results. Last month, the company was targeted by a couple of activist investors, Maselman Advisors and Ancora Advisors. The firms have a combined 11.5% stake and are seeking 9 board seats. Now, Big Lots rose today to its highest price since the activists surfaced, thanks to a real estate deal. The company's selling distribution centers in Alabama, Ohio, Oklahoma, and Pennsylvania to an investment firm, Oak Street Real Estate Capital, for $725 million. Big Lots is going to lease back these centers, so you can call it a sale-leaseback deal. The company expects to clear about $550 million, which will be used to pay off debt and add to its cash. Big Lots shares rose in response by as much as 31.5% and closed with a gain of 24.5%.
All right. I like that one, Dave. Big Lots. And you do wonder, whether this is the sort of name that in this kind of economic environment may do okay. We were talking about Dollar General earlier in the week and, whether these discount
if you go to their website, Jason, they are definitely pushing the sort of daily items that people have been buying in response to the coronavirus and everything coming out of that. So they're looking to take advantage of it for sure.
That's a huge jump. Still down, though, Dave. 31% this year.
You could say that about a lot of stocks, and certainly with retailers, they've had their issues.
Yeah, exactly.
All right, Dave Wilson, hope you get some good vinyl going on your turntable this weekend, long weekend there in the Wilson household. Dave Wilson, always our go-to guy when it comes to stocks, charts, all things market-related. Carol?
Yes, let's get some world and national news headlines. Standing by is Ed Baxter out there in San Francisco. Hey, Ed.
All right. Hey, Carol, just want to mention briefly, UK Prime Minister Boris Johnson, good news, out of the ICU. He is back to the hospital ward, so we'll continue to watch that. The director of the U.S. National Institute of Infectious Disease, Dr. Anthony Fauci, is reinforcing today the possible lower number of deaths from the coronavirus.
Viral diseases that are respiratory borne, where people continue to touch their face and then shake hands and touch doorknobs. To me, the better part of valor is just hold off on that for a while.
Yeah, so he says hold off, please, and let's not go back to the norm just yet.
We've gone from 100,000 to 200,000 down to about 60. That's the good news. What we need to do is to make sure we don't let up on those mitigation, those physical separation programs.
New York State had the largest number of deaths in one day of any state so far, but the curve of new infections is flattening, the fewest number of hospitalizations day to day. But Governor Andrew Cuomo says for anybody thinking that the effort to contain it is over,
we're on the first wave. Everybody is assuming, well, once we get through this, we're done. I wouldn't be so quick to assume that.
And he says the numbers are devastating emotionally and practically today. New Jersey expects to reach the top of the curve of infections in 2 to 3 days. In California, Gavin Newsom, the governor, is announcing a new program for healthcare workers who need to stay away from their homes for scheduling health reasons.
By providing them vouchers and stipends, and in many cases for low-wage workers, 100% reimbursable costs at hotels all up and down the state of California.
He also says deaths day to day up, new admissions up, but he says for the first time a decline in ICU admissions. In San Francisco, I'm Ed Baxter. Jason Carroll.
All right, Ed, thank you so much. You are listening to Bloomberg Business Week. Jason Kelly and Carol Massar. And obviously, the Fed front and center today. Jay Powell, some more action. Carol, let's get into it with our next guest, Janelle Woodward, Head of Fixed Income and Senior Portfolio Manager for BMO Global Asset Management. They look after about $273 billion. She joins us on the phone, I believe, from Miami. Janelle, how are you doing?
I'm doing great. Certainly not the quiet day we would expect in fixed income markets going into a holiday weekend.
Seriously.
Thank you very much, Fed, right?
Yeah, my goodness.
Yeah.
Chair Powell made it interesting. So what did you think about when you heard the chairman as well as saw those headlines about the latest move from the Fed?
Yeah, I think two thoughts. The one, the timing was interesting. We've seen recently the two significant policy actions were done on Sunday night and Monday morning. So the timing was interesting going into the long weekend. But I think it speaks to this concept of function and liquidity in the system, and that there still needs to be more work to be done. We think that the changes, particularly on the credit side, increasing the size of the primary market corporate credit facility and the secondary market corporate credit facility, extending it and giving clarity on the ability to buy crossover names, and then stepping in to buy high yield ETFs, just really significant in credit markets, and we saw spreads move significantly today.
So is there kind of an assumption out there, Janelle, that the Fed is going to do whatever it needs to do to make sure things are working properly? And does that shape how you kind of approach investing in this market right now?
Yeah, I think that Chairman Powell's been very clear on that. We think that the goal is still to support and not distort the markets, but it does seem that it's going to be about whatever it takes, especially as we look to address function and liquidity of markets. And I think it's important to note that while we're addressing those components, there is a flow through and a spillover into fundamentals. So as we think about spreads being dislocated, high yield trading as an entire sector at distressed levels, this has real fundamental implications on credits, their ability to fund, the cost at which they fund. So there's definitely a positive feedback loop into entities and the financial health of those entities.
So, Janelle, as you're talking to your customers, clients, investors, what's their mood at this point? Obviously people may be a little cooped up personally, but what are they sensing in this market, especially as we're a few weeks into this crisis now? Obviously, the equity markets are signaling some optimism and enthusiasm, but on the fixed income side, what are you hearing from folks?
Yeah, I would say cautious optimism there as well. I think we're very thoughtful. We're going to kick off earnings season next week and begin to see what that looks like. But I think going back to the Fed programs, as well as what we've seen on the fiscal side, and then as well as what we're seeing in terms of virus cases, there is a confidence that there will be another side of it. I think one of the things that's so interesting about fixed income markets is that we can look at spreads and we can estimate what the implied default rate is, and then look at what we've realized. And so one of the things that we're doing across our portfolios is we're staying short, but we like some of these flat inverted spreads, staying in the investment grade sector, following the Fed, if you will, in terms of their buying program. And we have a lot of confidence in that trade right now.
Well, I want to ask you about two things that I think are going to, obviously shape how we all trade. I mean, are you worried about a bunch of corporate defaults? And if so, in what areas? And secondly, we did hear from Jay Powell, one of the sound bites that we played earlier, was that he anticipates the economic rebound will be robust once we get on the side of it. Let's go there first, Janelle. Do you buy that?
I think time will tell in terms of the economic rebound. What we will say is that coming off of what's been a very low period of defaults, we would expect an uptick in defaults. We would expect downgrades to continue, but I think part of this goes back to in what risk is priced into the market. And when we look at the credit markets, particularly the higher quality aspects of high yield, and then certainly investment grade, and certainly on the front end, short maturity debt, where we can really model out that cash flow. We have a lot of confidence that you're being well compensated, even if volatility persists for several months going forward.
And so, what do you worry about the most here in this market, Janelle?
I think it is about the duration of this. If we go on for 3 or 6 months, if we see virus cases tick back up, I think that time piece is certainly what worries us the most.
Well, and it's interesting. I just want to go back to corporate. Would you recommend a Carnival now that it's gotten some investments? I mean, are there certain issues that, or airlines? I mean, I'm just curious what your take is on those.
I think we're very cautious about those names. Certainly, we've seen elements of support across programs. But if we look at Carnival, it is a high-yield issuer. We're choosing. We think there's a lot of opportunities in defensive sectors. We've really seen the whole sector sell off. It's not just been about some of these subsectors. So higher quality, more defensive sector, consumer products, healthcare sectors, even some of the financials, we think make a lot of sense. And for us, it's about layering in, and that's really where we're looking to add risk in the immediate term.
Well, it's been interesting, too, to see some of those issues, especially as it relates to, like, retail and restaurants. I'm thinking about the news this week about Landry's, Carol, and everything that's been going on there, sort of testing the market in a way in an industry, especially when you think about retail and especially restaurants, that, we just don't know what the other side of this looks like, Janelle.
Yeah, it's interesting. I will say, even on the retail space, over the last 2 weeks, we've seen 2 highly rated retailers, Ross and TJ Maxx, come to market and fund quite well. And so I think, again, where are you starting from in terms of leverage, in terms of liquidity? But I think there is value across all sectors.
All right, we're going to leave it on that note. Janelle Woodward, she's head of fixed income and senior portfolio manager of BMO Global Asset Management, $273 billion in assets under management, joining us on the phone from Miami. So good to check in with her. I mean, this was a big move once again by the Fed, Jason, and it really does shape how folks are looking at the market, and it's kind of the ultimate backstop.
Well, and that fixed income market becomes really, really important to people, especially when you're getting down to the nitty gritty of personal portfolio management. I was talking to a wealth advisor earlier today, and he was essentially saying, look, if you've got a 60-40 or maybe even a 70-30, obviously most people are more heavily weighted toward equities, but, fixed income has definitely been your friend in this regard. It's why you balance a portfolio like that, right?
And it goes back to, I think, a little bit of what we talked about earlier for our New York audience about Joseph Stiglitz and making sure that we don't have all of a sudden a ton of bankruptcies within our economy. And maybe that's more relevant to smaller companies. And that's why we keep hearing about aid for the small businesses. But nonetheless, we need to watch those numbers, right? Because if we have a free fall of bankruptcies in the corporate community, that's problematic.
Well, and it is, to that point of systemic that you just brought up with Stiglitz, that's really what you worry about, because there is a knock-on effect. And at a time when we're seeing all these jobless claims that are really hard to get your head around, this idea of 16 million, and we probably haven't gotten to the real bottom of this yet with filing problems and who knows how long this is going to last. You do think about all of those things starting to build on each other, and you wonder what sort of intervention has to come, to your point and to Stiglitz's point, from the government on that front, beyond fiscal and monetary stimulus.
All right, you're listening to Bloomberg Business Week. Carol Massar along with Jason Kelly. We do have some interesting interviews that are coming up in just a moment, so I'm looking forward to checking in on the educational publishing area. We've got the president and CEO of McGraw-Hill, and he's been stuck in London. He could not get home, so it's a personal story. It's obviously a professional story as well, so we'll talk with him. And then later on, we've got the founder and CEO of Zoom. It is the cover story of Bloomberg Business Week magazine, so I'm looking forward to him. This is, I didn't know about Zoom before.
Well, that's what I was going to say.
Being stuck at home, and now I've used it several times.
Yeah, it's one of those things that if you didn't, and I think you said this at the top of the show, if you didn't know this name before and you're now working from home, or you have a kid, you have almost certainly experienced this or certainly heard about it. Investors have heard about it. Yeah. Educators certainly involved in that as well.
All right. You're listening to Bloomberg Business Week, so we will be checking in with them in just a moment. In the meantime, we do want to get an update on some of the day's business news and also on those closing numbers on Wall Street. For that, let's turn things over to Charlie Pellet.
And I thank you very much. Here's what's going on. We have got the Dow, the S&P, and NASDAQ. Yes, a holiday shortened trading week, 4 days this week. During those 4 days, though, the S&P did advance by more than 12%. Today, the S&P picked up 39 points, a gain of 1.5%. The Dow up 285 points, up 1.2%. NASDAQ up 62, a gain of 0.8%. S&P, by the way, finishing the week at 2789. The International Monetary Fund sees the world suffering its worst recession since the Great Depression this year, with emerging markets and low-income nations in Africa, Latin America, and Asia at particularly high risk. Gold up today by 2.2%, $16.82 the ounce. Crude, big story there with West Texas Intermediate crude down 7.6%, $23.16 a barrel. Again, recapping here, S&P up 39, a gain of 1.5%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you very much. You are listening to Bloomberg Business Week, and really, Carol, as we take stock of this week, it'll be interesting, to see where we start next week. Not to look past the long weekend, but after this week of green, we're going to see people. Maybe it's going to be a nice weekend, and sort of see how they act, see how they're thinking, see what some of those curves do, whether they stay flat or whether we get some more worrisome medical data.
Absolutely. This is going to be important over the weekend in terms of those trend lines. I will say one of the themes we talked about, kind of, fear versus greed, that was certainly something that played about, but we also talked a lot about the academic world and education and whether or not that's going to see some longer term impacts because of schools being shut down and a lot of folks having to now, K through 12 and then beyond, having to learn at home. So let's get into that with Simon Allen. He is president and CEO of the global educational publishing giant McGraw-Hill. He joins us on the phone from London. He's based in New York, but in London because he couldn't get back home. Simon, really appreciative of you joining us here on Bloomberg. Tell us, first of all, about how you're doing, personally, how you're doing, and your family. I hope everybody's okay.
Well, thank you very much for asking. Yes, everyone is fine. It was a case of I'm going to get marooned somewhere in the world as this virus spread, and it seemed I was lucky enough to be marooned at home with my lovely wife, and I've been here since the early part of March, and who knows how long I'll be here. But I'm well, my family are well, thank you, and most importantly, our 4,000 employees around the world are also well, and we check on those individuals extremely frequently, and we make sure that we do everything we can to support them. And it's challenging times all over the world for us and for everybody, but so far we're dealing with it, I think, quite well.
Well, Simon, let's talk about your company. We definitely want to talk about sort of the broader market and the education market specifically, but tell us how you as a leader sort of deal with this at this point in terms of how you check in with your employees. What are you doing differently? What are you learning maybe about the way your company operates at this moment?
Well, we focus a lot on communication with our staff, and that includes myself and all of my leadership team. I do regular video updates to the staff that we post pretty much immediately on our company intranet so the staff can hear from me directly. And we're talking about how people are doing, how the business is going, how our different offices around the world are functioning. We talked recently about China opening back up again a week or so ago. We talked about then another close in Singapore and then in Delhi. And, of course, our U.S. offices all closed around March 17th. And we really just check in frequently to make sure our staff are feeling connected. They know that they get the support they need from us. And to be perfectly honest, the phrase I use a lot is that right now we cannot over-communicate.
Right.
It's really important that we get messages out to everybody.
What's been the trickiest part of all of this? I mean, obviously concerned about the health and welfare of your workers, and that is just a given. But I'm just curious, as you as a leader, you've got to keep a company together. You've got customers that probably need you more than ever because of online and virtual learning at this point and the demand of such. But I'm just curious, what's been the trickiest part for you?
I think that there's two answers to that, really. The trickiest part from a staff perspective is allowing our staff the flexibility to feel that it's okay to try and work remotely, dealing with young children very often, sometimes with elderly relatives that are with them, and just dealing with the pressures of life alongside trying to work. So, for example, I just heard yesterday that we've had a 32% increase in weekend log-ons to all of our network activity, and that's much higher than you would expect for a weekend. But of course, many of our staff during the weeks are looking after their children, and they're doing things that otherwise would have been done for them at school. They're homeschooling their own children. We're trying to provide them with material and content that they can use, and that's working well. I think that's one key challenge. The other one, from a customer perspective, we had an enormous increase in contact with our faculty customers and instructors across the U.S., where within a few days we were literally talking to 5,000 new instructors, building over 4,000 courses for our higher education group. And in many instances, these are faculty members that are unfamiliar with teaching online. They're not familiar with the processes. They're not familiar with how assessment can work through, and generally how you organize and orchestrate a course delivered purely online. That's been, for us, actually a very pleasing challenge, because we've been able to help and really serve all of our higher ed and K-12 customers across the country. And it feels good that we're able to offer that support and assistance right now.
And so what do you think, and we're going to spend a little bit of time with you and bring you back so you don't have to answer everything right now, but because this is a big question, how has education changed maybe fundamentally at this point? What are you learning that you think is going to stick?
It's a great question, because I actually think it is going to stick. I think the change that we're seeing right now is not something that's going to revert back to a normal environment when classes begin back in August, September, at any grade level. I think what we're learning is the ability of the teaching community to adjust to what has changed enormously in their lives recently. I think we're learning the agility of parents to work with their children now, many of them homeschooling, and how we can support that. And I think we're also learning the oft-quoted phrase of social distancing. It's going to be very interesting when students go back into a lecture hall, say 600 students learning economics. That's going to be very different in September, when people have been trying to keep away from each other for so many months. This will have a reverberation, I think, across society, and it's definitely going to include education.
But as you know, we talked to the president of Simmons University yesterday. We've been talking to heads of colleges and universities. And, part of what's wonderful, though, about education is being within a group, that face-to-face learning, either with a teacher or with your classmates. I mean, do you think that's just going to be to the wayside? Just got about 40 seconds, and then we'll bring you back.
I think absolutely that's going to be a key element. You can never divorce the teacher and the teaching process from the education function ever. It's critical that teaching function works well. I think you'll see a lot of blended classes where there's some physical contact and continual contact with students, and then you'll see also the online aspects that will support that physical presence.
All right, Simon Allen, stick with us. We really appreciate you hanging out for a few minutes because we want to continue this conversation, maybe dig deeper into some of what you're seeing from a higher ed perspective as well. As Carol said, it's a theme we've been talking about a lot with college and university presidents across the country. Simon Allen is the president and CEO of McGraw-Hill, joining us on the phone from London. We'll continue our conversation after a short break, Carol. And what I love about this is we're going to lead from him into a conversation with the CEO of Zoom, who is right at the center of these same things. The number of Zooms that are going on in my house, at least, and probably yours, enormous.
Yeah, it's learning. It's also, my daughter and her friends did a surprise birthday party for one of their classmates. All right, let's get back to World of National News headlines. Back over to Ed Baxter we go in San Francisco. Hi, Ed.
Hi, Carol. Yeah, thank you. Statistically, very interesting day in New York. Lowest number of new infections to date, but also the most deaths. Governor Andrew Cuomo says this is a time frame where the war is going to be fought.
It is essential that we keep that curve flattened because we don't have an option of handling the curve if it goes higher.
And the mayor?
April and May are when we have to win this phase. We have to push back this disease. We have to open that door to the next phase where things get better.
Bill de Blasio says the federal government still needs to communicate with the city about needs and emphasizes again social separation. New Jersey expects to reach the top of its curve in infections in 2 to 3 days. Again, these are projections. In California, one day glimmer as Governor Gavin Newsom says the fewest number of ICU admissions to date. Having said that, the number of hospital admissions and deaths are still up day to day. And at today's briefing, he was asked to defend his efforts to share medical supplies.
Our curve is not bending like other states. We have stretched our curve, giving us a little bit more time, but we can't just sit on assets when we can save lives.
Again, that comes after the ventilators went to New York. He also announced a program today to help healthcare workers with reimbursement for hotel costs that they need to sleep away from home. UK Prime Minister Boris Johnson out of the ICU, as Foreign Secretary Dominic Raab saying he is in good spirits back in the hospital ward. Raab also says it's too soon for social distancing measures to end. In San Francisco, I'm Ed Baxter. This is Bloomberg Radio.
Message and data rates may apply. T&C and privacy terms can be found at babbel.com/terms. Please don't text and drive.
Have you wanted to speak a new language, but you thought it'd be too hard or take too much time? Then try Babbel for free by texting EXPLORE to 64,000. In just 15 minutes a day, you'll be on your way to speaking a new language in just a few weeks. And right now, you can try Babbel for free. Babbel starts out teaching you words and phrases by matching them with pictures. You won't believe how easy the interactive program is. Soon the sentences get a little bigger, and before you know it, you're having simulated conversations voiced by native speakers. And because Babbel is crafted by language experts and uses the spaced repetition method, in just 10 to 15 minutes a day, you'll be speaking the language of your choice with real confidence. With Babbel, you can speak a language. Just text EXPLORE to 64,000 and start your first lesson in the language of your choice for free. Download the Babbel app or text EXPLORE to 64,000 and try it for free. Text EXPLORE to 64,000.
Vatsal Shah is Senior Project Engineer at Mott MacDonald, a global engineering consultancy with more than 16,000 employees. He earned his PhD at New Jersey Institute of Technology and as an adjunct professor is helping NJIT students explore emerging technologies.
My focus is renewable markets, emerging technologies, the idea of floating cities. What are we doing to develop that? What will happen to the city on the water? Well, you're going to have waves hitting it. You're going to have solar. How are you going to develop plants? How are you going to develop vegetation and farming? That sort of thought process happens at NJIT. We actually plan out what will the city look like. How do we develop that? So in 10 years, we're actually ready to take on those challenges when we have our first development in the water. NJIT also has been doing a lot of work in self-healing materials, so taking the polymers and the new material that we have in our material sciences departments and putting them into things like concrete, things like steel, reinforcing our soil.
NJIT, New Jersey Institute of Technology. Learn more at njit.edu.
This is a message from the government about this bank holiday weekend and keeping yourself, your friends and family safe from coronavirus. This bank holiday weekend, do not go out unless absolutely necessary. Do not meet up with anyone outside your household. Do not put the lives of your loved ones in danger. Stay in touch with them on social media or give them a call. Anyone can get coronavirus and anyone can spread it. Stay home. Protect the NHS. Save lives.
Not all heroes wear capes, but most wear tights. Keep up with everything happening in the wild world of pro wrestling with a podcast on TuneIn. For expert analysis of the latest wrestling storylines, turn on the WWE podcast.
Big Steve-able edition.
Or listen to the Steve Austin Show for no-holds-barred conversations with wrestling's biggest personalities.
Because now on the show, everybody's kind of the same size, but as soon as I saw you, it's been...
For these and more, search sports and scroll down to the world of wrestling.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
You love TuneIn for live breaking news from CNN, MSNBC, Fox, CNBC, and more. But when you can't catch your favorite show as it airs, it might just be a click away as a podcast. Search your favorite news station to explore all the on-demand news shows on TuneIn.
Are we at war with COVID-19? The metaphor of choice is framing the way we confront the crisis, and not in a good way.
This virus does not have intent. It can't be negotiated with. There will be no truce.
Also, in this time of national unity, should celebrities just shut up? Don't miss this week's On the Media from WNYC. Listen to the On the Media podcast on TuneIn today.
Get your MLB fix with these great podcasts on TuneIn. Fill your seventh inning stretch with the Ringer MLB Show.
I just can't get over it. It's like, oh, well, Jeter Downs. Didn't realize he was a top. Like, my dad is drinking the Kool-Aid on this. He's like, of course. Mookie was going to leave. I'm like, what do you mean? You don't know that.
Slide into second with the Starting Nine podcast.
Nolan Arenado slides right into the top spot for favorite baseball player. Active in the league right now. It is a pleasure to be sitting next to you, sir.
Thank you, man. I appreciate it. Thank you.
This is we've been waiting a long time for this. We actually, in terms of like active
Round the Bases with the Statcast podcast.
Ways of going about it. I picked third, so in some ways it made it easier for me. Mike, just to go over the first couple of picks. Mike took Barry Bonds, who I think was kind of the obvious guy to take number one. Not only
catch these and more MLB podcasts right here on TuneIn.
Given all the extra time spent at home these days, are you using TuneIn in all the ways you could be? With hundreds of compatible devices, including smart speakers like Sonos, Bose, and Roku, and smart assistants like Alexa and Google Home, there's always a way to listen to the audio you love. Go to TuneIn.com to discover all the ways to listen.
Get your daily dose of NFL shop talk with these great podcasts on TuneIn. Start your morning off right with Around the NFL.
Injured, depleted roster into the playoffs, and I didn't think they belonged in the playoffs.
I think overall, though, it was a great divisional round weekend because you got the first one.
Run into the end zone with the Move the Sticks podcast.
We had a fun little Zoom cocktail hour last night.
Oh, yeah.
What a star-studded affair. Greg, you were there for the earlier part, but it really popped off a little later on. We had Zach Goldman.
And dive deep into the sidelines with the Peter King podcast.
On the occasion of his 50th birthday, come down and record a little bit of retrospective on the life and times of Brett Lorenzo Favre.
That sounds like a bestseller.
It sounds like a precursor to a funeral. That's what it is.
I wasn't thinking that.
Explore these and more hard-hitting NFL podcasts right here on TuneIn.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and on Quick Take by Bloomberg. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pelleton. Up week, best week since 1974. S&P up for the third time in 4 days. Gold, 7-year high. Oil drops even after the Saudis and Russia forge a pact on cuts. S&P 500 index up 39 points today, ending the week heading into a 3-day weekend at 2789, up by 1.4%. The Dow up 285 points, up 1.2%. Nasdaq up 62. That was a gain of 0.8%. Stocks moved higher as investors look past staggering jobless numbers when the Federal Reserve released new measures to cushion the fallout from the coronavirus. Gold, as I mentioned, up 2.4%, $16.85 the ounce, and West Texas Intermediate crude dropped 7.8%, $23.14 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening to Bloomberg Business Week. Let's continue our conversation with Simon Allen, President and CEO of McGraw-Hill, joining us on the phone from his home in London. Simon, thank you so much for sticking with us. Well, as we've been talking about, the world of education probably fundamentally and permanently changed here. I did want to talk to you a little bit, if we could, more about higher education, because Carol and I have been rather parochially, shall we say, and selfishly asking this question to a lot of guests, because we both have juniors in high school. I also have a sophomore, so it's top of mind when it comes to college admissions, college education, and sort of higher education in general, which feels like it is going to change. You mentioned, the big lecture halls, but I also wonder about generally instruction and the types of schools that may come to the fore in this new world. What do you make of that?
It's a great question. I think higher education is going to significantly change when we get through this current situation with the coronavirus. I would say that it's actually been in a change mode, though, for the last 2 decades. And for McGraw-Hill, we've invested a lot of money, hundreds of millions of dollars a year on our platforms, and our technology investment over the last 2 decades has really paid off very well. So we're now seeing about 74% of our higher education business is digitally delivered already. So the transition has happened, and it's been accelerating in the last few years. But I think, to your point, Jason, that the next few months are going to see a significant shift beyond that 74%. And I think we're going to see instructors who have perhaps dabbled with the idea of online learning before. I think we're going to see these individuals now feeling that they absolutely must do it to make sure that they're serving their students, because a lot of students will start to say,